So in this chapter, if you see first value of supply, like it is dealt in section number 15, and section 15 has 5 subsections 1, 2, 3, 4 and 5. So 1, 2, 3 mainly is talking about value of supply, inclusions and exclusions. Subsection 4 and subsection 5, subsection 4 and subsection 5 purely in CA final only, in CA intermediate it is not there. That is the structure of this particular section and chapter in your CA course. Now coming to the value of supply, sir, GST is a rate and that rate should be imposed on a value. So for that, what should be taken as value of supply? Simple, the law says value of supply nothing but transaction value you should take as value of supply. The transaction value means what? Transaction value means whatever the price is paid by the recipient to the supplier. Sir, will you believe that price whatever they are dealing with? Yes, provided they are not related and they are paying only monetary consideration, that is price is the sole consideration. So transaction value will be taken as value of supply. That means price actually paid or payable will be taken as value of supply, where supplier and recipient are not related and price is the sole consideration, that is monetary consideration only, then only transaction value will be taken. Okay, in the law, if at all these conditions are violated, then we should go with valuation rules. Okay, right. In the law itself, they have given some inclusions and exclusions. See, I have given a small notes here. Okay, here if you see, one second, if you want you can take a screenshot of this also, right? One second. For the transaction value, you can take some inclusions and exclusions which are given in the law itself, Hope you have taken the screenshot, right? Let us go forward without wasting the time. First of all, sir, understand, in the law they have given 5 inclusions, 1 exclusion. Just remember, like Pandavas and Draupadi. Okay, 5 inclusions and 1 exclusion will finish the 15 subsection 1, 2 and 3. Okay, now coming to inclusions, what and all should be added to value of supply? Sir, what and all should be added to value of supply? All taxes and cess whatever you see other than GST and TCS under income tax, not GST. Okay, so all taxes like municipal tax, entertainment tax, customs duty, whatever it is, sir, everything you add it to value of supply other than GST, that is other than CGST, SGST, UTGST, AGST and GST compensation cess, and also TCS under income tax, you don't add it to the value of supply. That is what the concept. Okay, right, that is number 1 addition. Next, number 2, payment made by the recipient which is to be incurred by the supplier. That means in simple words I'll tell you, obligation of the supplier discharged by the recipient. If the obligation of the supplier is discharged by the recipient, then that should be added to the value of supply. Here, see, for example, see, you are coming to me to purchase some furniture, let us assume furniture in the example. Okay, let us assume furniture, you are coming to buy some red sandalwood furniture with me. Sir, for that I am charging 10 lakhs plus GST. What you are saying, Vishnu sir, out of the 10 lakhs we will pay you only 6 lakhs. You are buying the goods, the red sandalwood, from your friend Mr. Pushpa, unregistered fellow, no? To him we will pay that 4 lakhs directly, and to you we will pay only 6 lakhs. You charge GST only on 6 lakhs, sir. Like that you are asking. I said, okay, fine. But what the law says, that 4 lakhs is obligation of Vishnu and discharged by the students. That should also be added to the value of supply. So it will be total 10 lakhs on which I should charge GST. This is what the concept. Okay, so just go through this example. So I repeat, obligation of the supplier discharged by the recipient, then it will be added to the value of supply. That means you don't try to cheat the government by playing these tricks. Okay, so that is what the point. Next, what is the next one? The incidental expenses. The third inclusion is incidental expenses. Whatever incidental expenses supplier is incurring and recovering from the recipient. Okay, that means let us assume packing charges, transportation charges, weighing charges, whatever it is incurred by the supplier, recovered from the recipient, then it will be added to the value of supply. That is what the concept. Okay, fine. Next, interest, late fee, penalty for delay in payment of consideration. This is something interesting here. Now please understand, in GST, whenever you go through interest, understand, whenever you go through interest in GST, the interest will come in 2 circumstances. Number 1, you are taking loan from somebody, or you are taking advance or deposit for which you are paying interest. So I say that interest by way of extending loans, advances or deposits, that is exempt under GST. Okay, sir, for you, hint is, for this type of situations there will be 3 parties. You are selling, buying and lender. Sir, you are buying some goods, for that you don't have money, you are going to some third person and asking some loan, and that fellow is giving, for that you are paying interest. So here he is giving you money and for that he is charging interest. Okay, that is exempt under GST if you remember the exemptions. Second situation is, sir, I am selling some goods to you. You are saying, Vishnu sir, I don't have money. I'll pay after 30 days. I said, no problem, Rob. Pay 1,000 rupees interest. Pay 1,000 rupees interest. So you are paying me 1,000 rupees interest. That will be added to the value of supply. And whatever the treatment for the principal supply, the main thing what I am selling to you, on that whatever tax is applicable, the same will be applicable on this interest also. That means, understand, interest will come in two circumstances. One is for extending loans, advances or deposits, where I am giving you loan or allowing you to use my money and I am charging interest, exempt under GST. The second scenario is where I am only supplying some goods or services to you for which you are making payment to me but paying late interest or late fee or penalty for delay in payment of consideration. So that will be added to value of supply and will be subjected to GST. Okay, so that is what the point. So here that is regarding interest. And one mistake what you do in the problems with respect to interest, sir, interest, should I assume it as inclusive of GST or exclusive of GST? Please understand, question there can be two types. One is they will just say in the question interest paid, late fees paid. I repeat, this interest we are talking for delay in payment of consideration, that only should be added to the value of supply. So in that case, question you have two things. One is they'll give just interest paid 10,000. They will not talk about whether extra GST you have received, etc., etc., nothing. That means what? You have got 10,000 rupees interest. You assume it as inclusive of GST and proceed with the problem. Or they will clearly mention in the question somewhere in a corner, all that amounts mentioned above are excluding taxes. Interest somewhere in the table above they would have given 10,000, 20,000 like that, 15,000 like that, and somewhere bottom of the question they would have mentioned all the amounts given above are excluding taxes. Then you should take it as exclusive. Okay, so I repeat, if the question says just interest paid, then treat it as inclusive. Or if the question clearly mentions these are excluding taxes, all that stuff, then please treat it as exclusive of taxes. Clear? So I repeat, interest paid for delay in payment of consideration only will be added to the value of supply. Interest for giving loan is exempt under GST, that will not have any tax implication. Hope it is clear. That is with respect to interest. Next one, with respect to subsidy. If you are following, we are discussing 5 inclusions. Number 1, all the taxes paid other than GST and TCS under income tax. Next, obligation of supplier discharged by the recipient. Next, incidental expenses incurred by the supplier is recovered from the recipient. Interest or late fee or penalty for delay in payment of consideration. That is what we have discussed now. So hope it is clear for you. Last one, final one, subsidies. Subsidies will be added to the value of supply. Subsidies will be added to the value of supply when it is directly linked to the price. That is first key point. It should be first directly linked to the price. Then you should check who has given that. Sir, if government has given that, ignore it. If anybody else has given, please add it to the value of supply. Clear? Right. So that is what the point, guys. And one more thing here for interest late fee. First of all, let me finish that. For interest and late fee, I have given one small problem also in the notes here, so you can just check this. This is November 2022 somewhere CA inter question actually, but a nice question, delivery agent like that. So you can just go with this question. They have just asked in the question gross GST liability and ITC available. That's all. They did not ask anything extra. Okay, so that is what the point. So hope it is clear for you. Just take a screenshot of it and just try it. Just go through the question enough. But nice question. Right. So coming back to the subsidy, as we were talking, so subsidies other than central government and state government subsidies, if it is directly linked to the price of the goods or service, whatever it is we have supplied, then it should be added to the value of supply. Okay, see now for example, I have given in the example also here for that, and example, yes, you can understand, simple small one, you can just go through. I want to talk about the treatment in problems, actually that is the main thing. So here there is an example, you can just understand, where I am selling notebooks for 50 rupees and I am entering into an MOU with government, where government is saying we will give you 20 rupees subsidy, sell the notebooks for 30 rupees only. I am selling the notebooks for 30 rupees, so I am getting from customer 30 rupees, from government I am getting subsidy 20 rupees. The value of supply is 30 rupees. But same MOU, if I am entering with Infosys Foundation or some other private NGOs, whatever it is, other than central government, state government, then the same MOU I am entering, 30 rupees I am getting from customer, 20 rupees I am getting from the NGOs, all that, then the value of supply will be 50 rupees, not 30 rupees. Hope it is clear. And I repeat, the subsidies like given for buying the plant and machinery or setting up the factory, purchasing the land, all these things will not have any direct link to the price. So those subsidies will not be considered while calculating the value of supply. Hope it is clear for you. Right, so that is the example. Now as I was talking about the tax treatment, the treatment in problems. See, in problems mainly you will find these three type of wordings. Subsidy, sir, whenever you see in problem, they may use the word like price after considering subsidy. Please understand, price after considering subsidy or after including subsidiary are different. If that says if it says, please understand, price after considering subsidy, that means what? We know that we will receive the subsidy. We know that we will receive the subsidy and we are fixing this price. Let us assume price after considering subsidy is 10,000 rupees. That means I want this 10,000 rupees and I know that I will get subsidy also of 500. That means it will become 10,500. It doesn't mean that in the 10,500 subsidy is included. No, it is not like that. Only if they say subsidy is included there in the price, then only you should take it as included. Subsidy is like after considering subsidy means I know that I will get subsidy. It doesn't mean that the subsidy amount is included in the price. Please don't misunderstand that. This is one mistake you might be doing. Next, the next one is net of subsidies. When they say net of subsidies, subsidies are removed from that amount. So whatever the amount, the list price or whatever the value have been given there, it is excluding subsidies. It is not including subsidies. So please understand, net of subsidies means subsidies are removed from that value. It is not included in the price. So please remember this carefully. Okay, so this is what the concept all about. So with respect to subsidies, so with this we are done with the inclusions part. Hope you are clear with this inclusions. So 5 inclusions we have discussed. So the next, if you see exclusions, sir, exclusions, only one exclusion, discount. But the point is, when this discount is given, simple, sir, discount may be given at the time of supply or after the supply. If it is given at the time of supply, simple treatment, just show that separately in the invoice, exclude it from the value of supply, enjoy. Am I clear? So I repeat, if the discount is given at the time of supply, exclude it from the value of supply and enjoy. Sir, if the discount is given after the supply, then don't think, sir, who will give discount after the supply? In case of B2B scenarios, there might be a situation where discount is given after the supply. You don't worry about who will give that. Just remember, sir, if the discount is given after the supply is over, then you can exclude the discount from the value of supply provided 3 conditions are satisfied. Number 1, it should be as per the terms of the agreement which we have already entered into. Next, terms of the agreement means need not be in writing, always remember that. Number 2, so number 2, that discount should be linked to a particular invoice. And number 3, sir, proportionate ITC should be reversed by the recipient. Okay, then the discount will be excluded. Suppose if you are not satisfying these conditions, it doesn't mean that law is prohibiting you from giving discount. You give discount to your customer, we are not stopping you, and show that in your books of accounts. We are not worried about that. Only thing, I will not give you benefit under GST if you don't follow these 3 conditions. If you follow all these 3 conditions, enjoy the benefit from GST also. Your GST liability will be reduced, and opposite fellows, of course, ITC will be reduced. That's a different story. But if you are giving discount and you are not following these conditions after the value of supply, after the supply is over, then that discount will remain only in your books. In GST, we don't have an impact. That means imagine 10 lakhs is the value of supply, you give 1 lakh discount, but you have not satisfied these conditions. For the purpose of GST, you should be paying GST on 10 lakhs only. But in your books, you might have shown 9 lakhs, all that nonsense, whatever it is. But for us in GST, you should pay GST on 10 lakhs. Am I clear? So hope it is clear for you. Okay, so there is an example also here with respect to that. So you can just go through this example as I already explained. Sir, for example, I'm making a supply to MSD on 25th June, credit period 90 days, and if you pay within 30 days, I will give you 10% discount, like that I told. He is paying within 30 days, so he is claiming discount. Now, whether this discount can be excluded from value of supply? Yes, it can be excluded from value of supply, because first of all, I told it at the time of supply only. If you make payment within 30 days, I will give you 10% discount as per the terms, and this is linked to invoice. And the only condition is that MSD should reverse proportionate ITC on that discount. 1,12,000 GST will be there. Proportionate ITC he has to reduce. So that way I have given a comprehensive example here. You can just check that. One second. And there is a clarification with respect to no claim bonus actually. So what is this no claim bonus? Nothing but, sir, when I'm purchasing a car, first year I'm taking insurance. Of course, every year we'll be renewing the insurance. Now, when we are going for the renewal of the insurance, if you have not taken any claim in the last year, if you have not taken any claim in the last year, then to appreciate your driving skills, what the insurance company will do, insurance company will say, sir, last year you did not claim anything from us, so we are happy, we have saved so much of money because of your great driving. So this year we'll give you something called no claim bonus. And I'm asking, like, please give me that bonus. Then the insurance company says, we will not give it in actual physical form, sir, but in the renewal insurance premium, we will give it in the form of discount. So now the doubt was, what is the tax treatment for this no claim bonus? And as I already told you, sir, this is just like a discount. They are giving it to you in the next premium payment. So it is excluded from the value of supply. So that is what the concept here. There is a small example also for that. You can just go through this, right? So this is with respect to the clarification on no claim bonus. So input tax credit, everybody see, first of all, just to correct your basics. See, when we are making outward supplies, sir, our outward supplies may be covered under forward charge or may be covered under reverse charge. If they are covered under forward charge, what we will do, we will collect tax from the customer and we have to pay it to the government. While paying it to the government, we will use our ITC balance, and if it is not sufficient, we will go with cash. Sir, no sir, whatever the outward supplies we are making, that is sales, if it is covered under reverse charge, we will raise the invoice, we will supply the goods or services, our customer will directly go and pay the GST to the government. We don't have to do anything. So what is the only duty we have? Eat 5-star, do nothing. So that is the scenario. But sir, here one important thing, yes, one important thing is, because we are making outward RCM supplies, we cannot take ITC on our inward supplies. Hope you remember that, right? Now coming to the next one, sir, if I'm making purchases, if we are making purchases, whether it is covered under forward charge or reverse charge, sir, if it is covered under forward charge, what we will do? We will pay GST to the supplier, supplier will pay to the government, and government will give it to us as ITC. Same way, if the purchases are covered under reverse charge, what we will do? We will directly go and pay GST to the government. Government will give that amount as ITC to us. Simple. So here the only thing which we have to remember is, sir, whether the purchase is covered under forward charge or reverse charge, you can happily take ITC. So please remember that it is your purchase. Your purchases, if you are buying it for business purpose, you can happily take ITC. So whether it is covered under forward charge or reverse charge, the only condition is, sir, when we are buying something, we should use it for making taxable outward supplies, then only we can take ITC. If we are making it, like using it for making exempt outward supplies, we cannot take ITC. But we are using it for taxable supplies, we can take ITC. That we will discuss in section 17, nothing to worry. So this is the overview of GST liability. So what is that we have to understand? See, sir, whenever there is GST payable to government, GST payable to government can come in two circumstances. One is on your sales, the other is on your purchases. If at all GST liability comes on your sales, then, sir, if you are going and paying GST, you can use your ITC balance. If it is not sufficient, use cash balance. Because to pay output tax, you can use input tax. If it is not sufficient, pay cash. Right. Sir, no, sir, I am going to pay GST under reverse charge mechanism on my purchases. Then again, simple. See, if at all you are purchasing something and paying GST under RCM, this is your input tax. So you cannot use input tax to pay this. So you should pay this only in cash. So simple. When you have GST liability in hand, that is directly to pay to the government. If you sell something, you have to pay directly something to the government. So that output tax, you can use input tax or cash. Sir, I am purchasing something covered under reverse charge. So that is your input tax. So to pay input tax, you cannot use input tax. So you should use cash only. So that is what the concept here. With this overview in mind, let us proceed into the chapter. So before proceeding into the chapter, you should remember, or you should understand, sir, whenever we are buying something under GST, that may be goods or that may be services. Goods, if we are buying, if we capitalize that, then it is called capital goods. If we don't capitalize that, then it is normal inputs. Hope you are clear with this. If we buy some goods and we capitalize it, it is called capital goods, and if we buy something and we don't capitalize it, if it is goods, we call it as inputs. But sir, for services, there is no such differentiation. We call it as input service. Whether you capitalize or don't capitalize, all that nonsense. Okay. Goods, capitalized capital goods, not capitalized inputs. Services, straight away input services. Hope you are thorough with that, right? So with this, let us proceed with first point, section 16. Section 16 has 4 subsections. Earlier, now they have added subsection 5 and 6 also. 5 is not relevant for you. Subsection 6 we will be discussing. Okay, so first going to 16 subsection 1, simple sir. 16 subsection 1 says every person who wants ITC, he should be registered under GST, sir. Without registration, how will I give you ITC? So you should be first registered, and of course, whatever you are buying, you should be using it for business, or you should have intention to use it for business. That means not only the goods or services, whatever you procured, the goods, whatever lying in the godown are also liable for, are also eligible for ITC. Not only the goods which you have used in manufacture, but also the goods lying in stock, lying in godown are also eligible for ITC. That is what 16 subsection 2 say, 1 says, sorry. So that is 16 subsection 1, simple eligibility for ITC. Let us move on to 16 subsection 2. So coming to 16 subsection 2, what are the conditions for availing ITC? 16 subsection 2 number also you should remember properly. So please make sure you remember 16 subsection 2. What is 16 subsection 2? Conditions for availing ITC. Sir, what are the conditions for availing ITC? Number 1, simple sir. You should be possessing some or the other documentary evidence, sir. Then only I can give you ITC. Without that, sorry, I cannot give you ITC. So please have some documentary evidence. What is that documentary evidence, sir? That can be a tax invoice, that can be a debit note, that can be a revised tax invoice, that can be bill of entry, that can be document issued by input service distributor, or that can be a self invoice also. Sir, please give some documentary evidence so that I can give you ITC. Okay, so please have that. And one more thing is what, sir, if at all coming with this documentary details, if you see any demand that is raised, sir, any demand that is raised on account of fraud or willful misstatement or suppression of facts cannot be availed as ITC. So if this is done on account of fraud or willful misstatement, suppression of facts, all the stuff under section 74, okay, then also you cannot avail ITC on that. That is what another point. Next, no ITC will be given to a registered person in respect of invoices or debit notes which have been furnished by the supplier in GSTR 1 or IFF, and the details are reflected in GSTR 2B for the recipient. That means simple, what we are trying to tell here, sir, for you, if you want ITC, your supplier should have filed his GSTR 1 and it should have been reflected in your GSTR 2B. Then only we will give you ITC. Otherwise, we are sorry, go and fight with your supplier. We will not give you ITC because it is not reflected in your 2B. So simple, if it is reflected in your 2B, then only you can take ITC. If it is not reflected in 2B, go and fight with your supplier. Don't come and fight with department. That is what they are saying, right? Next, what is the next condition, sir? The next condition is what? If you are buying some goods or services, if you have actually received the goods or services, then only you can take ITC. Sir, goods are in transit, or I will receive the goods tomorrow, day after tomorrow, like that. If you keep on telling stories, we will not give you ITC. Please understand that. Okay, only if you actually received the goods, then you can take ITC. Sir, on behalf of me, my job worker has received, sir, the goods. Who will be working on behalf of me, sir? Will you give me ITC? No problem, we will give you, don't worry. So goods can be received even by the job worker, even by some third person on the directions given by you. Still you can take ITC. Sir, what if the goods are coming in lots or installments? Sir, 10 lorries the goods are coming, sir. 8 lorries came, sir. 2 lorries are still in transit. Then only after the receipt of last lorry you take ITC. Okay, don't come and disturb in middle. Okay, so that is what the concept. So I repeat, actually goods or services should have been received by the recipient to claim ITC, even if his job worker or any other third person for that matter has received it on the directions of the recipient. Still recipient is eligible for ITC. Another additional point here is, sir, if at all goods are received in lots or installments, only after the receipt of last lot or installment you can take ITC, but all that lots or installments should be covered under single invoice. That means one single invoice, 10 lorries are coming to transport the goods. Then after the receipt or after the delivery of 10th lorry only you can take ITC. No sir, 10 lorries, 10 different invoices. Then how many lorries deliver the goods? That will be the last lot, so that you can take ITC. I repeat, if it is single invoice, 10 lorries, then after the receipt of last lot only you can take ITC. You should be careful in the questions, where in the questions they will say goods, the last lot will be received in the next month or that next month. This month can you take ITC? No sir, this month you cannot take ITC. I am extremely sorry. Clear? So that is what the concept. Okay, next. Sir, whatever is reflected in 2B, will you give me ITC? Yes, I will give you ITC, but it should not be restricted by the government. Okay, so that means government has the power to restrict the ITC, whatever has been reflected in 2B. So you cannot take ITC. Okay, so using section 38, government has used that power, and still they have framed section 38. They have not yet fully utilized that power, where they are saying that if at all you are buying something that it is reflecting in your 2B, and that purchases are from a person who is a new registrant or who has defaulted in paying taxes, whose output tax as per GSTR 1 and 3B are mismatching. So in one he is showing more liability, 3B is showing less liability. Okay, and who is availing ITC more than what is there in 2B, and sir, who is defaulting his tax liability under section 49 subsection 2, that is rule 86B, or any other specified class of persons. From these people, if you buy something and if it is reflecting in your GSTR 2B, I am extremely sorry, we will not give you ITC. And please understand, this is still in a section phase. So for this, rules has to be prescribed, and as of now there are no such rules which are talking about this, except of course here this point and this point, actually not this one. Okay, certain points have come into effect, certain points not come into effect, leave it. Okay, if these are the cases, the government in this case can deny you ITC. Okay, that means what? Whenever you are buying something, you should do background verification of the person from whom you are supplying. That means you should take the GST number of the supplier, go to the commissioner, sit in front of the commissioner and say, sir, tell me the horoscope of this fellow, whether this fellow is paying taxes correctly or not, whether this fellow is taking ITC properly or not, tell me I should buy something from him. That means do some background verification, just like when you are getting married, you will do no background verification. The same way, do background verification of the supplier, before buying the goods or services from him. Otherwise, your ITC will be at risk. That is what this point all about. Okay, fine, sir, no problem. That means what? Government can deny ITC for you even though it is reflected in 2B. Simple. Next, sir, the supplier should have discharged his tax liability. That means supplier should have paid taxes. Then only recipient will get ITC. Okay, here with respect to this, we have section 41 read along with rule 37A. If you see what the law is saying. See, GSTR 1 supplier is filing, recipient will get in his 2B, recipient will take ITC. But who will give money to the government? Supplier should give money to the government. How he will give? By filing GSTR 3B. That fellow supplier from whom you have purchased, he filed GSTR 1 properly, but 3B he did not file. That means he did not pay tax only to the government. But you enjoyed ITC, recipient. So what the law is saying here, the recipient, if you have taken ITC because it reflected in 2B, why it reflected in 2B? Because your supplier filed 1. But whether your supplier has filed GSTR 3B, that you please check. If that fellow has not filed his GSTR 3B, by 30th September of the succeeding financial year, whatever ITC I gave to you, please give it back to me, because I did not get money from your supplier. Like that government is asking. So before 30th September, your supplier should have filed this GSTR 3B, okay, and paid taxes to the government, which you got as ITC already. If he has not done that, by 30th November of the succeeding financial year, that means in another 2 months time, you should reverse the ITC without any interest. One second. Here I have given one example, see. But sir, if you don't pay that within 30th November, then what should be done? You should reverse the ITC along with interest under section 50, that is the twist. Okay, sir, I will reverse the ITC along with interest or without interest, as the case may be. What if after 2-3 years my supplier becomes a good boy and file his GSTR 3B and pay tax to you? Can I re-avail ITC? Yes, you can re-avail ITC. Sir, is there any section 16 subsection 4 time limit would have been over? No, sir, by that time. 16 subsection 4 is not applicable in this case. Yeah, see, understand, 16 subsection 4 is applicable only for availing ITC. Here, this is re-availing ITC. So 16 subsection 4 is like, see, only when you are getting married for the first time, they will see age. For second time marriage and all, they will not see any age. That means 16 subsection 4 time limit is applicable only when you are availing ITC. Here you have availed ITC, reversed ITC, and again now re-availing ITC. So in such cases, 16 subsection 4 time limit is not applicable. Hope it is clear for you, right? So here what we are trying to tell, sir, in short, what is it you are trying to tell, sir? See, supplier has filed his GSTR 1, because of that you got it in your GSTR 2B, but supplier did not file 3B. That means government did not get money, but the recipient got ITC. So government is under loss here. So what government is saying, by 30th September, if you are 30th September of the succeeding financial year, if your supplier has not filed his GSTR 3B, then you should reverse the ITC by 30th November without any interest. I'm giving you 2 months time without interest. By 30th November also, if you have not paid that, then reverse the ITC along with interest. Tomorrow, if at any point of time that buffalo files GSTR 3B, who? Your supplier. then you reavail ITC. Only reavail ITC, interest you cannot reavail. Okay, please understand that. And here for reavailing ITC, 16 subsection 4 time limit, 16 subsection 4 time limit is not applicable. Okay, so that is what the point. Okay, wonderful, super. Okay, if you want to just go with this example, see here, just go with this example. 1 second. Yes, you can take a screenshot of this if you want. Hope it is clear. You can pause the video also and you can just go through the example once. I have just given it along with the dates and numbers for your clarity. Okay, hope it is clear for you. Section 41 read with rule 37A. Okay, let us move on to the next one. The next one is the first proviso under section 16 subsection 2. So the first proviso we have already discussed. When the goods are coming in lots or installments, we can take ITC only after the receipt of last lorry or last installment, whatever it is, but they should be covered under single invoice that we have already discussed, right? Let us move on to the important proviso, second proviso read along with rule 37. What is this rule 37, second proviso? Do you remember, my dear friends, that 180 days time limit concept? So if the supplier makes any supply to the recipient has to make payment to the supplier both value and GST within 180 days from your birthday or my birthday, from invoice birthday, that is from the date of invoice. Yes, he has to make the payment, not only value but also GST. If he is not doing that, he should reverse the ITC along with interest under section 50. One interesting thing here is, if you have made part payment, proportionate amount will be considered. For that I will show you one example also. And tomorrow in future, if you make payment later on, maybe after 180 days you have reversed the ITC, after 200 days, 230 days, 360 days, 440 days, whatever it is, you have made payment to the supplier, can you reavail the ITC now? Yes, you can reavail the ITC. You know, reavailing ITC, there is no time limit only, correct? So only for availing ITC there is time limit. 16 subsection 4 is not applicable when we are reavailing the ITC. So happily you can reavail ITC, but interest will not come. Am I clear? So I repeat, within 180 days from the date of invoice, recipient should make payment to the supplier both value and GST. Otherwise, he has to reverse the ITC along with the interest. Later on in future, if he is making any payment, he can just reavail the ITC. 16 subsection 4 time limit is not applicable, and he can reavail the ITC. Interest part, he cannot take anything benefit. Okay, if at all he has made any part payment, the proportionate amount he has to reverse. Now, this 180 days reversal concept is not applicable for these three cases. Number one, supplies covered under reverse charge mechanism. Number two, deemed supplies without consideration, that is schedule 1 transactions, and whatever the additions we have made to the value of supply. If you remember section 15 subsection 2, inclusions, obligation of the supplier discharged by the recipient, so that is added to the value of supply because it is already discharged by the recipient. Okay, so again recipient will not pay that amount to supplier. If you remember that Pushparaj example, 10 lakhs furniture, you are paying me 6 lakhs and directly 4 lakhs to Pushpa, so that case only. Okay, so that is what the point. Okay, for that 180 days time limit is not applicable. So here if you see, sir, 1 lakh plus 18,000 is the GST, so 1 lakh 18,000 you should have paid. What if you have paid only part amount 60,000? Part amount 60,000. Okay, with ignoring interest, if you calculate what is the ITC here, sir, to be reversed, you should pay 1 lakh 18,000, but you have paid 60,000. What is the balance? 58,000. But this 1 lakh 18,000, when it is including GST, this 60,000 is also including GST. You cannot take it like excluding GST. Balance amount 58,000 is including GST, which you have to pay. So 58,000 into 18 divided by 118 will give you the reversal amount. 8847 you have to reverse. Okay, so that is the concept. So here if you see, I've given this example, you can just 1 second pause the video. iPad itself is not sufficient for the examples. Okay, so I think it is little bit okay for you. You can just manage it if you take the screenshot. So go with that. This much zooming and all we cannot do, that is a problem. Okay, 1 second guys. Yes, this one you can manage. So please pause the video and go through the example, or just take the screenshot of it and then revise. Otherwise, material is available in our Telegram channel. You can just go with the soft copy, no issues at all. So that's all with respect to that particular point, and with this we are done with section 16 subsection 2. Yes, we are done with section 16 subsection 2 with respect to that. And of course there is a small clarification here with respect to molds and dies which are used. Okay, see here, nothing but a small clarification. Let me close this. So here what is happening now, normally when there is original equipment manufacturer, sir, original equipment manufacturer, what he will do, sir, he will manufacture the equipments and give to component manufacturer. For example, laptop is there, laptop battery, the laptop company will not manufacture, they will give it to original equipment manufacturer, another fellow who will manufacture them, and he will give it to the component manufacturer. Now what happens, please understand, sir, for this we are one second. Yes, see here one small confusion, that's all. See, this original equipment manufacturer is, let us assume, the laptop company. Laptop company will not manufacture their batteries, own batteries, so they will outsource it. So that fellow is called component manufacturer. Okay, so to manufacture that component, what this original equipment manufacturer will do, he will purchase some molds and dies and he will avail ITC. Those molds and dies he will give to component manufacturer for manufacturing the components. Whether this ITC to be reversed by original equipment manufacturer is the point. First of all, understand here that he is buying these things for business purpose and issuing it for business purpose, issuing them for business purpose. Okay, so there is no need to reverse the ITC, and of course component manufacturer also doesn't have any obligation to use his own molds and dies. So original equipment manufacturer giving the molds and dies to the component manufacturer is very much in the course of business. Very simple. I am original equipment manufacturer and I am giving, you are the component manufacturer, I am asking you to manufacture my laptop batteries. I am buying the molds and dies for that and I am giving it to you. Can I avail ITC? Yes, I can happily avail ITC because I am giving that to you in the course of furtherance of business only, for getting my products manufactured only. Now the important point here is, you don't have any obligation to buy molds and dies. I will be providing, then happily I can avail ITC of that. Okay, so now whatever the molds and dies I am giving it to you, is it added in the value of supply which you are providing to me? No, this is not obligation of the supplier discharged by the recipient. Please don't misunderstand. I'll just put it like this. Wait, laptop manufacturer, battery manufacturer. Okay, sir, this fellow will manufacture batteries and give to laptop fellow. Now the problem is, molds and dies this fellow is buying and giving to him, buying and giving to him. This molds and dies, will it be added to the value of supply? The answer is no, because these molds and dies are not the obligation of the component manufacturer. So laptop manufacturer is buying them and giving it to him. It is his obligation only. It is not supplier's obligation discharged by recipient. That case is not there here. So what original equipment manufacturer will do, he will take ITC of this. Okay, and this value will not be added in the value of supply of this fellow selling battery. On that battery the value will be there, no, for that value molds and dies value will not be added. This is not obligate. This, if you understand, battery manufacturer is the supplier, original equipment manufacturer is the recipient. Okay, that is the case. Fine, hope it is clear for you. Just go through that. And next, okay, so with this we are done with section 16 subsection 2 as well. Yes, sorry, here one more point, small point we have missed out is, yes sir, whatever you said is fine. If the component manufacturer doesn't have an obligation to use his own molds and dies, you are buying and giving, then no problem. What if he has an obligation and you are buying and giving to him? Then yes, we will add it to the value of supply. And original equipment manufacturer can avail ITC? No, he cannot avail ITC. So simple, supplier has an obligation, recipient is buying it and giving. Can recipient when he purchase take ITC? No. Okay, sir, supplier doesn't have any obligation. Recipient only should give them. So recipient buying and giving. So recipient can take ITC. And it will not be added between the value of supply provided by supplier to the recipient. Okay, so that is what the concept here. Yes. So I repeat, original equipment manufacturer is the recipient, component manufacturer is the supplier. Okay, original equipment manufacturer is buying and giving the molds and dies. We should see whose obligation it is. If it is the obligation of the recipient, original equipment manufacturer himself, then in such case what will happen? He will take ITC, and component manufacturer giving supply to original equipment manufacturer, in that it will not be added, the value of molds and dies will not be added. Okay, that is the case. No sir, it is the responsibility of component manufacturer to buy these molds and dies. Then original equipment manufacturer buying the molds and dies cannot take ITC, and the value of molds and dies will be added in the value of supply between component manufacturer and original equipment manufacturer. That is what the case, right? So just now take a screenshot of this or pause the video and go through this, see carefully. This is first scenario and this is the next scenario. So the next one is 16 subsection 3, simple one sir. If you are purchasing capital goods, on that you have paid GST, that GST component take as ITC, that is one option for you, or add the GST component paid on capital goods to the cost of capital goods and claim depreciation fully, that is second option for you, but don't do both. So simple sir, you have purchased 100 lakh worth capital goods and you have paid GST 12 lakhs. Sir, this 100 lakhs, of course, you capitalize and you claim depreciation on this, no doubt about that. But sir, on this 12 lakhs, you either take ITC or you claim depreciation, but not both. Both not possible. Clear? So that is 16 subsection 3, simple one. So the next one, very important section, 16 subsection 4. You should remember the subsection number as well. You know that, sir, what is time limit for availing ITC? The time limit for availing ITC is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier with respect to any invoice. So what we should see first, we should take an invoice. We should see for which financial year this invoice belongs to, and from that financial year, next financial year, 30th November or actual date of filing the annual return of that financial year to which this invoice belongs, whichever is earlier, that will be the deadline to take ITC. So here if you see invoice number 183, sir, belonging to 23-24 financial year, 23-24 financial year, received by MSD, on which GST paid is 10,000. Now, sir, this invoice belongs to 23-24 financial year. What is the deadline to take ITC on this 10,000? We should see, sir, 30th November of succeeding financial year, that is 24-25 financial year. That means 30th November 2024, or this invoice belongs to 23-24 financial year. That financial year, when you are actually filing the annual return, whichever is earlier, that will be the deadline. Okay, so that will be the deadline. Hope it is clear for you. One interesting point here, what we have to consider is, sir, if at all we have given debit note for any invoice, and that debit note is falling in different financial year, invoice is falling in different financial year. As I have given here example, sir, invoice belongs to Jan 2024, sir, and on that 4,15,000 GST has been paid, sir. Debit note has been given on April 2024, which is coming in 24-25 financial year. That means invoice is coming in 23-24 financial year, debit note is coming in 24-25 financial year. For invoice, yes, 16 subsection 4 time limit will be okay, 30th November of 2024 or actual date of filing annual return of 23-24 financial year. But for debit note, what is the relevant financial year we should consider? Should we consider the invoice financial year or debit note financial year? That is the concept. Sir, for invoice, relevant financial year will be the year in which invoice is raised. Same way, for debit note, the relevant financial year will be the financial year in which debit note was raised. Okay, don't link this to invoice financial year, please. That is what the concept. So I repeat, the relevant financial year for invoice will be the financial year in which invoice is raised. The relevant financial year for debit note is the financial year in which debit note was raised. So that you have to consider and calculate the time limit under section 16 subsection 4. With this we are done with 16 subsection 4. Now let us move on to this new subsection 16 subsection 6, actually a very interesting provision, and I'm going to simplify it in such a way you'll definitely love this explanation from me, right? 16 subsection 6, what is 16 subsection 6? Time limit for taking ITC in case of revocation of cancellation of registration. Please understand, sir, what is this all about now? When your registration gets cancelled and you are asking for revocation, sir, there is a period of cancellation. From the period of cancellation till the revocation, what is the time gap is there? For this time gap you are not able to file the returns, and because you are not able to file the returns during that period, whatever the ITC is there, that ITC you will not be able to avail. And now when you have taken the revocation, now if you see, if you look back and you want to take ITC for those periods which over during that like cancellation and revocation period, if you want to take ITC, 16 subsection 4 time limit is over. In that case, how to handle? Now see, first of all, simple, what is this provision talking all about now? The date of cancellation, at the time of cancellation of that registration, for me during this period, I repeat, the period is between cancellation to revocation. For this period, whatever the returns you did not file, so for that period you have not taken ITC also, because you could not file your 3B. Now for that period, see, what we have to understand is, at the time of cancellation, whether 16 subsection 4 time limit was still available? Yes sir. Then in such case, please understand, avail ITC as per 16 subsection 4. Sorry, one second. So at the time of cancellation of registration, sir, whether 16 subsection 4 time limit is available? Yes sir. Now at the time of revocation, still if 16 subsection 4 time limit is available, that is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. So if that is available, accordingly you proceed. But sir, I'll give you example also for this, so please wait. But sir, at the time of revocation, at the time of cancellation, 16 subsection 4 time limit was available, but at the time of revocation, 16 subsection 4 time limit was not applicable, sir, not available, sir, 16 subsection 4. Then what should I do? Don't worry, for you 16 subsection 6 is coming to help. So 16 subsection 6 says you can take ITC for that period, the cancellation to revocation period, any returns. The time limit for availing ITC 16 subsection 4 time limit is over. Further, still if you can want, you can take ITC by filing those returns, the 3B, all that, by 30 days from the date of revocation order. 30 days, within 30 days from the date of revocation of cancellation, you can avail ITC. See, for example, I'll tell you, there is a company, Vivar Private Limited. They are not filing their returns continuously for 6 months. Because of that, the registration is cancelled. If you see, from 1st Feb 2024 to 31st July 2024, 6 months continuously they did not file the return. So they got the notice, all that stuff, and registration finally cancelled on 10th September 2024. Okay, 10th September 2024, with effect from retrospective effect 1st Feb 2024 itself, they have cancelled the registration. Now here what we have to see is, sir, what is the period of cancellation of registration? Sir, order of cancellation is given on 20th December, but it is cancelled from 1st Feb. So from 1st Feb, I am not able to file the returns. Now, sir, when I go for the revocation I got somewhere in 20th December. Sir, please understand, when I get the revocation on 20th December 2024, if you see, for me, I was not able to file returns from 1st Feb, correct? Because registration is cancelled from 1st Feb. So if you see, Feb and March 2024, the ITC belonging to those months, the time limit to avail ITC under section 16 subsection 4 was available. For me, ITC under 16 subsection 4 time limit is available at the time of cancelling my registration. So that 10th September they are cancelling the registration. During that time, I still had the chance to take ITC under 16 subsection 4. But at the time of revocation, if you see 20th December, by that time, for me, the time limit to avail ITC under 16 subsection 4 was not available. So simple, when the department was cancelled my registration, for me 16 subsection 4 time limit was applicable for Feb and March. I could have taken that if you have not cancelled my registration. But now you cancelled my registration, and at the time of revocation, if I see, after revocation time limit is over 16 subsection 4. So for Feb and March month, what should I do? You can take ITC by filing Feb and March month returns within 30 days from the date of revocation. The revocation is granted on 20th December. So from that 30 days, so 19th January 2025. So before that, by filing that return of Feb and March month, I can take ITC of Feb and March month 2024. Even though 16 subsection 4 time limit is expired, I can go with 16 subsection 6. Okay, that is the point. Suppose, sir, coming to April 2024 to December 2024 returns also I have not filed. For that also I have not taken ITC still. At the time of cancellation of my registration, that 16 subsection 4 time limit is over. After revocation also, still 16 subsection 4 time limit is available for me. That is, this is coming in 24-25 financial year, no, 30th November 2025, and actual date of filing annual return of 24-25. Till that I have the time limit, no. So April to March, December 2024 returns, I can happily file accordingly, and I can take ITC. I need not see 16 subsection 6 itself. I will see 16 subsection 6, simple words, when at the time of cancellation 16 subsection 4 time limit is applicable, but at the time of revocation it is not applicable. In that case I will go to 16 subsection 6. What 16 subsection 6 says? 16 subsection 6 says take ITC by filing the returns, pending returns within 30 days from the date of revocation of cancellation. So this is the notes for that. Hope it is crystal clear for you. This is the new section and very important section for you for your May 2025 exams. So please be careful. Now let us move on to next 17 subsection 5 blocked credits. You know, very important section. You should remember it very well. So 17 subsection 5 blocked credits. Sir, what is this blocked credit all about? Even though you are purchasing something for business purpose, you cannot avail ITC. Yes, even though you are buying it for business, you should always understand, yes, we are buying it for business purpose only, but still we cannot take ITC because it is given in 17 subsection 5. So what are the things which are given in 17 subsection 5? Let us quickly go with them. So first of all, motor vehicles. Sir, motor vehicles with less than or equal to 13 seating capacity, if you are buying even for business purpose, you cannot take ITC. Sir, if I am buying something with greater than 13 seating capacity for my business purpose, yes, you can take ITC. That means company buying a car cannot take ITC. Company buying a bus can take ITC. Company buying a lorry, tippers, dumpers, all that, yes, they can take ITC because they are not the vehicles for transporting the persons. Okay, so goods vehicles are obviously eligible for ITC, they are not covered here. So I repeat, motor vehicles with less than or equal to 13 seating capacity, if you are buying, you cannot take ITC even though it is for business purpose. If it is greater than 13, yes, you can take ITC. If it is a goods vehicle, yes, you can take ITC. And there are certain exceptions here, sir. Even though it is less than or equal to 13 seating capacity, you can take ITC. When? Sir, you can take ITC if at all you are using it for transportation of goods. That is not an exception, but that is understood by the law. Next, if you are buying them for transportation of passengers, that means you have travels and you are buying the car, yes, you can take ITC. No, sir, for further supply of such vehicles or conveyances, that means I am dealer in Royal Enfield bike and I am buying Royal Enfield bike, I can take ITC. But a company buying Royal Enfield bike for the use of director cannot take ITC. Next, for imparting training in driving skills. So suppose if you are having a driving school and you are buying the scooties or you are buying the cars for etc for driving schools, then you can take ITC. That is another point. Now here, so what we have understood is, if you are buying the motor vehicle, you cannot take ITC, correct? Sir, what do you mean by motor vehicle? Motor vehicle is defined in Motor Vehicle Act 1988. And accordingly, sir, motor vehicle means what? Which is mechanically propelled vehicle adapted for the use upon the roads, whether the power of propulsion is transmitted thereto from an external or internal source and includes chassis to which a body has been attached. All this is not that greatly relevant for us. For us, the main point is what are not motor vehicles. But sir, motor vehicle definition does not include vehicles which are running on fixed rails. That means if you are buying them, you can take ITC. Sir, vehicles which are specially adapted for use inside any factory or within the closed premises, or any vehicles which are with less than 4 wheels and fitted with an engine less than or equal to 25 cc capacity. Okay, so if it is less than 4 wheels and engine less than or equal to 25 cc, if that is the case, it is not a motor vehicle. For example, we are getting some battery cycles, no? So such type of things, these are not motor vehicles. These are not motor vehicles, and you can happily enjoy ITC if you buy them. So that is very interesting thing. So please understand that motor vehicles, if you buy less than or equal to 13 seating capacity, you cannot take ITC. But these three things, but these three things are not motor vehicles. So even though you buy them for business purpose, even though if it is less than or equal to 13 seating capacity, yes, you can happily avail ITC. You can happily avail ITC. That is the interesting part here. Hope it is clear for you. Okay. No, sir, I am buying less than or equal to 13 seating capacity, but for these purposes, for transporting the goods, passengers, further supply of such conveyances, and imparting training and driving skills, then you can take ITC. In other cases, you cannot take ITC if it is less than or equal to 13 seating capacity. Hope it is clear for you. Next, so the same logic is equally applicable. The same provisions, whatever we have discussed just now, are equally applicable even for the vessels and aircrafts. Vessels and aircrafts. So vessels and aircrafts also, if you are buying for business purpose, you cannot take ITC. But if at all you are buying them for transportation of goods, passengers, or further supply of such vessels or aircrafts, that means you are a dealer in aircraft or vessel, or for imparting training in flying or navigating skills, then you can happily take ITC. Otherwise, you cannot take ITC. Hope I am clear with this. So this is second one. Now coming to the next one. Sir, we have understood here, you are buying some conveyances. That means it can be vessels, aircrafts, or even vehicles. We call them together conveyances. Common word is conveyances. Some conveyances are eligible for ITC and majority cases it is not eligible for ITC. If it is eligible for ITC, suppose SpiceJet Airlines has purchased an aircraft and they are eligible for ITC. They are taking general insurance on that aircraft or servicing on that aircraft, repairs and maintenance on that aircraft, they can take ITC. But let us assume Vivar the private limited is buying an aircraft, a chartered flight for its CEO, and please understand whether we can take ITC on that. Vivar private limited is buying an aircraft, chartered flight for its company, and whether it is eligible for ITC? No, it is not eligible for ITC. The ITC is blocked. On that chartered flight, if the company is taking general insurance or servicing, repairs, all the stuff, it cannot take ITC. Suppose I am buying a car for my business purpose. Can I take ITC? No. For my car, I am taking insurance. I cannot take ITC. For my car, I am taking servicing. I cannot take ITC. Repairs and maintenance, I cannot take ITC. So now there are certain exceptions here. That is, if you are a manufacturer of that ineligible motor vehicles, suppose Honda company is there. Honda company is taking general insurance or servicing, repairs and maintenance on the stock Honda cars, they can take ITC. Or sir, if at all I am an insurance company taking general insurance on these vehicles, repairs, servicing on those vehicles, yes, I can take ITC. Yes, so that is what the point. So what are the exceptions here? For manufacturers and general insurance companies, they can take ITC on these three things. Okay, but others, if they are taking them on ineligible conveyances, they cannot take ITC. So simple, ineligible conveyances, you take general insurance, repairs and service, you cannot take ITC. But if it is an eligible conveyance, you can take ITC, or you are a manufacturer, you can take ITC, or if you are a general insurance company, you can take ITC of this particular services. Hope it is clear for you. Now, another interesting thing is, sir, if you are leasing, renting or hiring motor vehicles, vessels or aircrafts on which ITC is not allowed, that means ineligible conveyances as per our discussion. Those ineligible conveyances, if you are giving on lease or renting them or hiring them, then opposite fellow cannot take ITC of it. Opposite fellow cannot take ITC of it. But there are two exceptions. What are the two exceptions? He is taking them on rent for providing similar category of outward supply. He is taking them on rent for providing similar category of outward supply, or he is taking them on rent to provide to his employees as a part of statutory obligation. In those cases, he can take ITC. I repeat, I am leasing the ineligible for me ineligible conveyance, my car. I purchased it and I cannot take ITC. That is ineligible conveyance for me. I am renting that out to somebody. That fellow also cannot take ITC on that. The rent plus GST I will charge. He cannot take ITC except in two cases. He is taking that on rent to give it on rent. That means to provide similar category of outward supply. Or he is taking it on rent because he is an employer to provide to his employees as a part of statutory obligation. Then he can take ITC. Except those cases, he cannot take ITC. Am I clear? So that is what the concept. Next, understand this leasing is only for that conveyances, not leasing of any other items. So if you lease out any other items, you are leasing your laptop, leasing out your any other plant and machinery, all that. In such cases, ITC is there. It is not blocked. Please be careful. So there are some set of examples here. You can just pause the video and go through them. Yes, hope it is clear for you. Now let us move on to the next one. The next one is, sir, food and beverages, outdoor catering, beauty treatment, health services, cosmetic plastic surgery services, life insurance and health insurance services. If you are buying these things, you cannot take ITC, but there are two exceptions. Again, same similar category of outward supply, and if it is taken by employer to provide to his employees as a part of statutory obligations. So I am buying food and beverages for my office purpose, for my employees, etc., etc. I cannot take ITC, but I am buying that to give to employees as a statutory obligation. Remember, company policy is different, statutory obligation is different. Your company policy is something you voluntarily created. Statutory obligation, law has mandated that on you. So both are different. Please understand that. So it is not as a part of your company's policy, but it is as a part of statutory obligation. So I repeat, I am buying outdoor catering services because of there is a party happening in the office, some new year party, etc., etc. I cannot take ITC of that. But I am buying outdoor catering services to provide outdoor catering service, or I am buying food and beverages to provide food and beverages, or I am providing outdoor catering because it is a statutory obligation. So these things, sir, generally you cannot take ITC except if it is for providing to your employees as a part of statutory obligation, or you are buying them to provide the similar category of outward supply. Okay, so that is what the concept. Here I have given examples, you can just go through that. Same way, sir, membership of a club, health and a fitness center, you cannot take ITC except if it is taken by employer to provide to his employees as a part of statutory obligation. Next, leave travel benefits provided by employer to employee cannot be taken as ITC by the employer, again except if it is a part of statutory obligation. Examples are there here, you can just pause the video and just go through the examples. So going with the next one, works contract services, if at all, works contract is nothing but, see, both material and labor. So there are two things, works contract services, pure labor contract services. So works contract services, we get from the contractor both material as well as labor, and pure labor contract you get only labor services. So here what we are trying to do, please understand this works contract services and the next one, construction on own account. One second. Yes, both 2 points. I'm just covering here both the points. Yes, in same area. Yes, right. Now, see, let us assume KGF factories wants to construct their factory building and they're appointing a contractor called Mr. Rocky. Now, what he is doing, Rocky is providing works contract services for KGF factories. Even though it is business purpose, KGF factories cannot take ITC. This is the point. Or imagine KGF factories are buying bricks on their own, cement on their own, iron and steel on their own, labor services on their own, everything, and doing construction on their own account, and they want to take ITC. Can they take ITC? No, sir, I'm sorry. Works contract services also you cannot take ITC. If you are buying the goods and services separately on your own account and you are trying to claim ITC, then also I will not give you ITC. That is what the concept. Hope it is clear for you. Now, sir, there are of course exceptions. I repeat, whether you are taking works contract service or buying everything on your own and getting the construction done, then also ITC is not available. Hope it is clear. But the exceptions are if you are taking this to provide similar category of outward supply. That means Rocky Bhai is outsourcing the part of the work to Mr. Garuda, another works contractor or another contractor, providing services to Garuda. Garuda can avail ITC. Or Garuda buying bricks, iron and steel, cement, all this stuff to provide works contract services, or construction services. Then Garuda can take ITC. Are you able to understand? So you are buying these things to provide similar category of outward supply, then you can take ITC. Or you are buying these things, that is the works contract or construction on your own account for plant and machinery, or it's even foundation, for its foundation, still you can take ITC. But understand here the important thing is that plant and machinery means any apparatus or equipment or machinery fixed to earth by foundation or structural support and that are used for making outward supply of goods or services or both, and includes such foundational structural supports. But here the point is not inclusion, sir. The important point is exclusion, because plant and machinery you can take ITC. What are excluded from plant and machinery, on that you cannot take ITC. Are you able to understand? So what are excluded from plant and machinery definition, sir? Land and building and other civil structures, telecom towers, pipelines laid outside the factory premises. These are excluded from the definition of plant and machinery. That means you cannot avail ITC on these things. Any other thing, any machinery, equipment, etc., which is installed or used in the factory for making outward supply, for that construction, if you are taking works contract services or buying some goods and services, you can happily take ITC. Not only for plant and machinery, but also its foundation. If you're buying something, then you can take ITC, no doubt about that. And the last exception is, if you are buying this sorry, if at all you are buying these things and that expenditure is not capitalized, then also you can take ITC. Sir, what do you mean by expenditure is not capitalized? Sir, the meaning is it is actually a revenue expenditure. Then you cannot take, then you can take ITC. But if it is a capital expenditure, don't treat it like revenue expenditure to avail ITC. Okay. So if it is actually a revenue expenditure, there might be some rainy season, the water leakage, etc., every year it is happening. There are some cracks to the walls because of heavy temperatures and heavy rainfalls or uncertain climatic conditions. Yearly we are doing some patchwork to the office buildings or factory buildings. That is nothing but generally a revenue expenditure to us, that you can take ITC. If it is a capital expenditure, don't take ITC. That is what the concept. So works contract services and construction on own account, both the cases, sir, you cannot take ITC. But if it is for providing similar category of outward supply, or if it is related to plant and machinery, or if it is revenue expenditure, you can take ITC. Plant and machinery excludes land and building, civil structures, next telecom towers, and any pipelines laid outside the factory. Then these are excluded from the definition of plant and machinery, so you can happily not take ITC. That is what the point. Fine. So suppose if the pipelines are laid inside the factory, then it is plant and machinery, you can take ITC on that. So that is what the concept. Hope it is clear for you. Here there are examples, just go with them, pause the video and just go through the examples. We have already discussed the concept in detail. Next, this one, pause the video and go through the examples. If you are confident about the topic, no need. Now coming to the next one, sir, if at all you are purchasing something from composition dealer, you cannot take ITC. When you are buying something from composition dealer, he has not at all charged any tax from you. How can you take ITC of that? So you cannot take ITC. Sir, I am a non-resident taxable person, sir. For you, all the purchases are blocked. So under 17 subsection 5, for you, no ITC at all, except the goods imported by you. So local purchases, no ITC. Any services you have imported, no ITC. Only goods imported, you can enjoy ITC. That is what the benefit for non-resident taxable person. Next, sir, I am buying some goods and services for spending them under CSR initiative, sir. Using them for CSR initiative, sir. Sorry, use them for CSR initiative, and because you are doing the social service, ITC also you just ignore, no, forgo that ITC also, so that also not available. So you are purchasing something to fulfill CSR obligations, no ITC for you, right? And not only that, sir, I am buying some goods or services for personal consumption. For example, to attend an AGM, I am purchasing a suit or a blazer, or I got an appointment to meet Ambaniji, I am purchasing a watch, which are nothing but for your personal consumption, you cannot take ITC. So simple, goods or services procured for personal consumption, you cannot take ITC. Not only that, sir, any goods lost, stolen, destroyed, or written off or disposed by way of gifts or free samples, you are giving certain things as gifts to people, or you are writing off certain things, or some goods are destroyed in the factory because of fire accident, etc., those things you cannot take ITC. That is what the concept, right? So here there is one more small point regarding, sir, if at all you are paying taxes because of section 74, 129, 130, that is because of tax evasion or detention of your goods or conveyances, in such cases that amount you cannot take as ITC. So that is what blocked credit all about. Okay, here there is a small clarification. So the clarification is with respect to The time expired goods we are returning to the manufacturer, sir. In that case, what should I do? See, for example, I am a pharma manufacturer. I am sending some medicines or drugs to you. After the expiry of time, sir, after the expiry of the date, sir, you are returning those goods to me because they are unsold. So time expired goods, in that cases, when you are returning to them, if at all it is possible to raise a credit note, you raise a, sorry, I will raise a credit note on you. That means the manufacturer of the medicines will raise a credit note to the distributor. Simple. Wait, sorry, I am a manufacturer and you are my distributor. I have sent medicines to you. They have expired, time expired. Now you are returning to me. So when you are returning, what I will do? Sir, first I gave a tax invoice to you. Now what I will do? I will raise a credit note and reduce the liability. Simple. But for raising the credit note itself, the time limit is over. Then what should be done? Then you raise a tax invoice on me. You raise a tax invoice on me. Okay, you raise a tax invoice on me and charge GST from me and give it to the government. So simple. So this option is available for applicable, equally applicable, this clarification to all the goods which are returned to the manufacturer because of time expiry. So what manufacturer can do, because the goods what he has sold has been returned by the customers, he will raise a credit note to the customer. If time is over, what the option is available to him? Sir, customers should raise, that is the distributor should raise invoice on the manufacturer, fresh invoice on the manufacturer, and the manufacturer should pay GST to the distributor. Distributor will go and pay it to the government. That is what the concept. Okay, so with this we are done with section 17 subsection 5, blocked credits. And one more thing with respect to here, sir, samples and free gifts. Sir, whatever I'm buying for samples and free gifts, you know, ITC not available. Sir, buy one get one free, sir. Buy one get one free. See, I'm selling one 5-star and giving one 5-star free. On my purchases, should I reverse any ITC? Not required, because it is just like 10 rupees 5-star I am selling for 5 rupees. There is output tax. So ITC shall be available. No need to reverse or nothing. The discounts given, sir, buy more save more, we have seen discounts tax treatment already in value of supply chapter, and you are eligible to avail ITC, sir. Just because you are giving discount, it doesn't mean that you are not eligible for ITC. It doesn't mean that you should reverse proportionate ITC. No, nothing like that. Secondary discounts, the secondary discounts will not have any impact on the availability of ITC as well, because tax liability itself will not be reduced. There will be tax and there will be ITC also. No need to worry about. So simple, samples and free gifts if you are giving, for that if you buy something, no ITC. Buy one get one free will not have any impact on your ITC. Discounts also will not have any impact on your ITC. So no reversal, nothing is required. So that is what the concept. So the next one is 17 subsection 4. You know, 17 subsection 4 is nothing but for the banking companies, financial institutions and NBFCs, we are coming up with an option where, sir, they are providing taxable supplies and exempt supplies. They can go with 17 subsection 2 along with rule 42 and 43 and reverse the ITCs, all that we have calculated just now. So in that way they can proceed, or we want to make their life simple, easy. So in 17 subsection 4, what we are doing, we are coming up with an option to them. What is that option? Simple. Whatever you purchase, you take full ITC. We will not question whether it is used for taxable purpose or exempt purpose. Sir, is it true? Yes, but there is a small twist in the story. What is the twist in the story? Now, you should reverse 50% again at the end of the month. That means what? Flat 50% available. So simple, remember 17 subsection 4 if you are going with that. Sir, banking companies, financial institutions and NBFCs, for them, three things. Whatever blocked credits you purchase, no ITC, 0%. Other purchases you can take 50% ITC, and if at all you are buying from your own distinct persons, 100% ITC. So 0, 50, 100. That way you remember. That's all. That is what section 17 subsection 4. So if you want to follow this option, banking company, financial institutions and BFCs, you can follow this option. Or if you want to go with 17 subsection 2, you can go with 17 subsection 2 as well. But option once exercised will be valid for the entire financial year. So for entire financial year, one option only available. So that is what this 17 subsection 4 all about. There's a small question for you. You can just go through this. So with this, we are done with 17 subsection 4. Now the very important one, you know how to set off the ITC balance. Yes, the very important one, to set off the output tax with the input tax. So what are the rules for setting off that ITC balance? As you know, sir, IGST balance, ITC, CGST, ITC balance, SGST, ITC balance, we have to use them for set off of our output tax liability. Now the first agenda, you know, everybody knows that the first agenda is IGST, ITC under 0, correct? That is what our first target. So for that, what we can do, sir, we have to use it. First of all, please understand these things. IGST, CGST, SGST, these like are your three pockets. So you have money in three pockets, so you can take money out of that and spend that money. But remember, you cannot transfer the money from one pocket to another pocket. Please understand that. I repeat, there are three pockets, sir: IGST, CGST and SGST, and from those three pockets you can take money. You can take money only for spending, but not for transferring from one pocket to another pocket. That means the ITC from this account you cannot bring to this account, from this account you cannot bring it to this account. Please understand that, sir. You can only use them. You can only use the balances in ITC, but you cannot transfer that from one ITC head to another ITC head. Please be very careful. Okay. So IGST ITC balance, sir. IGST ITC balance, first you should be using it for IGST payable. Okay. After using it for IGST payable, then what will happen, sir? If at all any balance is there, CGST and SGST in any order, in any proportion, you can use it. But here, sir, when they say any order, any proportion, you should be very careful. They may say that any order, any proportion, but in the question, in the exam, not ask you the question where net GST payable. The question they will ask is net minimum GST payable in cash. That means this step, whatever is there, is going to be very crucial. You should use this ITC balance effectively in such a way where your utilization is so effective, the cash outflow will be as less as possible. That is very important. Okay. So I repeat, IGST ITC balance, you should first make it 0. Till then you cannot touch these accounts. Till then you cannot touch these accounts. Hope I am clear. Okay. So first, IGST ITC balance. If you see IGST payable, sir, IGST payable, IGST ITC balance you can use for IGST payable. Still we have balance, anything left out, use it for CGST or SGST in any order, in any proportion. The law says any order, any proportion, but you should use it effectively. Next, finally, still any balance is there, sir, in IGST ITC, then you will carry forward. Understand, in the answer, if you are listen carefully, this is one common mistake what you do. IGST ITC balance carry forward should not come. If at all it is coming, still your answer is right, provided there are two things. One is all the liability should have become 0. IGST ITC carry forward, if you get in the answer, that means all the liabilities became 0, and you have not touched or you have not utilized CGST, SGST balances. If these two conditions are satisfied, then only your answer is correct. Because without making this 0, you cannot use these accounts, correct? So please understand, if you get IGST ITC carry forward, that means liabilities are fully over, and CGST ITC balance, SGST ITC balance, you have not placed this. Okay, that should be the case. Right. Now coming to the point. Sir, IGST ITC balance, we made it 0. Imagine that way. Then what we can do? We can start using CGST ITC balance. CGST ITC balance, you can use it for what? CGST ITC balance, you can use it for CGST payable. First, till any balance is there, IGST payable. Till any balance is there, then carry forward. But you cannot use it for SGST payable. Same way, SGST ITC balance for SGST payable. Till any balance is there, IGST payable. And please understand, SGST ITC can be used for IGST payable only if CGST ITC credit is not available, balance is not available. But if you follow the sequence what I am doing, that is why when you are writing the answer, in the answer the format should be particular amount, and first you should take CGST, SGST, so that you will follow all these conditions. So IGST first to make it 0, IGST ITC first make it 0, then only come to CGST ITC. Once fully completing CGST ITC rules, then come to SGST, then automatically you will be following this condition. That means simple, if there is already CGST ITC balance to help IGST payable, then why you are going to help him like that? For SGST, the question will come to picture. So SGST can help IGST payable only if CGST balance is over. Hope it is clear for you. Am I clear? Right. So that is what the point. Fine. So those are the rules here. So I'll just show you one problem how to do this. See, understand the approach, how to set off actually. Imagine these are our output tax and input tax. Clear? So what is our first target? What is our first target? So our first target is to make this IGST ITC balance 0. For making it 0, you should use it for IGST payable. But here IGST payable is just 54,000, but ITC is 79,000. So IGST payable becomes 0. IGST payable becomes 0. But ITC doesn't become 0. So 79,000 minus 54. So still it will be like 25,000. Your target is to make it 0. Now understand, you have 25,000 in hand and you can use it for CGST or SGST payable in any order, any proportion. But you should not do that. You should see who actually, see, you have 25,000 amount in your hand. You should see who actually needs your help. You should see actually who needs your help. Sir, who needs your help? If you see, CGST payable is 72,000, ITC is 75,000. That means it has 3,000 extra money. It doesn't need anybody's help. But if you see, SGST 72,000 payable but 18,000 ITC. So that means it needs the help of 54,000. Still it has a shortfall of 54,000, if you understand. That means SGST is actually waiting for somebody to help. This way if you do, you will never go wrong. Yes, IGST, ITC balance extra you have in your hand. Sir, that amount to whom you can give, to whom you can help, to whom you can set off. See whether CGST needs help or SGST needs help. If they need help, how much they need. So that way you should proceed. Sir, here 25,000 I have, but SGST needs 54,000 help. CGST doesn't need any help. So you should not use that amount for CGST payable. If you use this 25,000 for CGST payable, that means you are helping a person who actually doesn't need any help. So automatically you are increasing your cash liability. Are you understanding that point? So use that 25,000 for paying this 72,000. Fully you help. So here 47,000 payable will be still remaining. This became 0. Your first target achieved. See, till this became 0, I did not touch these people. I did not use this CGST, SGST, ITC balances. So now IGST, ITC balance became 0. Now what I am doing? Sir, I am using CGST, ITC for CGST payable. The CGST payable 72,000 is there, that becomes 0. Now this CGST, ITC still 3,000 I have. But that CGST 3,000 ITC, what you can do? You can use it for IGST payable, but IGST payable is already 0. So what you can do now? Sir, you cannot use it for SGST payable, you know. So it is only it can be only carried forward. That is what the concept. Okay, it can only be carried forward. Right? That is the concept. Fine. Now coming to SGST. Sir, SGST ITC 18,000 is there, but liability 47,000. So if you reduce that, still 29,000 payable will be there. This became 0. So this will be the final answer if you see. Correct. So CGST carry forward 3,000, SGST payable 29,000. This will be the case. Hope it is clear for you. Right. So that is what the point. Next, fine. One more small way, like I'll help you to understand the procedure actually, how to just develop the thought process. See, again, same story. IGST you have 1,300, ITC but payable 1,000. Payable becomes 0, but ITC still 300 is there. Your target is to make this 300 0, IGST, ITC 0, correct? Your target is to make that 0. Now, understand you have 300 rupees in your hand and you have two parties to help in front of you. Sir, one is CGST, the other is SGST. CGST needs how much help from you? CGST needs, see, output tax is 300, input tax is 200. It needs 100 rupees help. Same way, SGST also 300, payable is there, 200 ITC is there. It needs 100 rupees help. Are you understanding the point? So in such case, sir, what will happen? Both of them needs 100 rupees help and you have 300 rupees in your hand. Correct. So when you have 300 rupees in hand and both of them needs 200 rupees help, what you should do? We should not go and fully help CGST 300, you take it, SGST 300, you take it. Any order, any proportion like that you should not do. Please understand. You have 300 in your hand and two of them standing in front of you, both of them asking 100 enough. Then first you should help both of them 100 minimum. That means you are effectively utilizing your money. Then extra 100 rupees is there, no, you give to anybody, it will not change the answer. So please understand, here the concept is not about giving them equally. 300 you have and giving them equally is not the concept. Please don't misunderstand that way. Sir, 300 I have, I'll give both of them 150. No, that is not the concept. See how much help both of them need. That much minimum if you are able to help, that is more than sufficient. No sir, I only have less money. then there is no problem. However, the answer will be perfect. So please understand, develop this thought process, who needs how much help. So I felt like this fellow needs 100, this fellow needs 100. So for both of them we are helping 100. So still I will be having 100 rupees. Now this full 100 rupees you help to CGST or you help to SGST, it doesn't change the answer. So I made first in queue CGST standing, I paid to him. So IGST ITC became 0. Now I can go with CGST with CGST 100 rupees carry forward, SGST both became 0. Clear? Guys, I repeat, when you have IGST ITC in your hand, you should see which fellow needs actually your help. Accordingly, you help both of them and then settle the liabilities. Okay, that is how you should develop the thought process. Hope it is clear for you. Right? But first your agenda is making IGST ITC balance 0. Till then you cannot touch CGST and SGST accounts. Clear? So that is what the concept. You can try this example. So the next section is nothing but section 18, actually all about we are going to see with. So section 18, if you see section 18, mainly first what I'll do, I'll discuss section 18 subsection 1, 4 and 6 first, then we'll go with subsection 3. Subsection 2 incidentally along with subsection 1 I'll discuss. So these are first one set of sections, then we'll go with subsection 3 separately. Now coming to the point, sir, what is section 18? Section 18 is all about, section 18 is dealing with ITC in special circumstances. I'm talking that dealing with ITC, it is not availing ITC or reversal ITC. So both are there in section 18. You can avail ITC as well as you can reverse ITC. So first of all, section 18 subsection 1 we are going through. So section 18 subsection 1 is talking about availing ITC in special cases. What are the special cases where you can avail ITC as per section 18 subsection 1? So there are 4 cases, clause A, B, C, D. A is all about you are becoming liable for registration and you are applying for registration within 30 days. Or you are taking voluntary registration, or you are coming from composition scheme to normal scheme, or your exempt supply becomes taxable supply. See, so long in past you did not take ITC because of various reasons. Either you are not registered, or you are under composition scheme, or making exempt supply. Now, sir, you are coming out of that and you are going to pay output tax. Because of that, what we are doing, whatever the stock you are having, inputs or capital goods, whatever you are bringing now into taxation net, we are going to give ITC. Here I repeat, clause A and B are one category, C and D are another category. What is that category, sir, if you ask me? Sir, in clause A and B, you are becoming liable for registration and immediately preceding date, closing stock. The date of becoming liable for registration is that immediately preceding day. Yes, this is the immediately preceding date of the date of becoming liable for registration. On that date, whatever is the closing stock you're having, inputs in stock or inputs in work in progress, inputs in finished goods, on all these things they will give you ITC, but no ITC on capital goods. Please understand that the important thing is here, no ITC on capital goods. Clause A and B, where you are becoming liable for registering and where you are going for a voluntary registration, both the cases, here you will take ITC. You are eligible for ITC only on inputs, not on capital goods. So the only difference is, sir, here the effective date is like the date of becoming liable for registration, immediately preceding day, the closing stock. Voluntary registration, the date of grant of registration certificate, immediately preceding day of date of grant of registration certificate. So on that date, whatever the inputs are there with you, maybe in stock or work in progress or finished goods, on that we will give you ITC, that is clause A and A and B. So A and B one set over. Coming to clause C and D. Clause C and D, sir, so long you are under composition scheme, now you are coming under normal scheme. You are coming out of composition scheme. The date when you become ineligible for composition scheme, immediately preceding day, whatever the inputs lying in stock, work in progress, finished goods, on that you can take ITC, and also you can take ITC on capital goods. That is why I told you clause C and D are different. What is the difference in clause C and D with respect to A and B? In A and B, you are not registered, now going for registration. C and D, you are already registered, but composition scheme to normal scheme you are coming, or exempt supply is becoming taxable supply. Hope it is clear. And one more thing, and one more difference is, sir, in clause A and B you can take ITC only on inputs, A and B. In C and D you can take ITC on both inputs as well as capital goods. So that is what the difference, another difference. Now here the point is, sir, if at all it is inputs in clause A and B, you can take ITC easily, proportionately. For example, when you have purchased 10,000 kgs, you did not take ITC, But now when you are coming out of that, like you became liable for registration, took registration, or voluntarily you took registration, now you have 2400 kg raw material pending with you, lying with you, maybe in stock or inputs or work in progress or finished goods, all that stuff. Now that 2400 kgs proportionately you will take. But sir, what about capital goods? In class C and D, you are also eligible for capital goods, correct? You can take ITC on capital goods. Sir, how much ITC you can take? Now, please understand, if you purchase today, when you are under normal scheme, registered under GST, using it for taxable supply, everything, you buy a capital goods, I will give 100% ITC. But why am I giving you that 100% ITC? Because I am believing that you will use that asset for 5 years at least. That is the standard assumption in GST. The useful life of the asset is 5 years. So I will give you 100% ITC, assuming that you are going to use it for 5 years. But the problem is you have already used it in composition scheme, or you have already used it under exempt supply. In such cases, sir, how much ITC I should give you? I cannot give you 100% ITC. So what I will do is, sir, 100% GST paid, whatever you have paid, total GST paid minus, sir, I will reduce 5% of every quarter you have used in composition scheme, you have used in exempt supply. Sir, that I will reduce, and balance amount I will give you. That means what? Simple. Total GST paid minus 5% per quarter or part thereof. So every quarter or part thereof also will be treated as one full quarter. So that much we will reduce, and on balance amount we will give you as ITC. Now see, for example, here you have purchased the capital goods on December 28th and paid GST 1,80,000. But you are under composition scheme, and you have opted composition scheme for financial year 1819 and 1920, and on 6th October you are coming out of, because your aggregate turnover has exceeded the threshold limit, you are coming out of composition scheme and coming into normal scheme. How much ITC you can take on capital goods? Means we should see how many quarters you have used. See, if you see, this is coming in quarter 3, financial year or calendar year, whatever you take, answer will not change. So don't worry about that. So quarter 3, so October to December quarter, this is happening in 1819. So in 1819 Q4 also you have used, and this event is happening in October to December quarter of 1920 financial year. That means Q1 there, Q2 there, and Q3 there. So total 5 quarters you have used. 5 quarters you have used. Are you able to understand? Are you able to understand? You have used Q3 and Q4 in 1819, and Q1, Q2, Q3 in 1920 financial year. So I repeat, whether you take it as calendar year or financial year, answer will not change, because the quarters are always same. Okay. So now 5 quarters you have used. So total GST paid 1,80,000 minus 5 quarters into 5%, that is 25%. If you remove, then that much amount you can take as ITC. That is what the answer. If you see, 1,80,000 minus 25%, 1,35,000 will be the ITC. Are you able to understand? Okay, so that's all. That is how you calculate. Hope it is clear for you. So for this, there is a procedure in Rule 40, whatever has been prescribed. Sir, what you are doing when you are taking ITC on capital goods, that we have already discussed how we will calculate that. And sir, form GST ITC 01 within 30 days should be filed from the date of becoming eligible for ITC under 18 subsection 1, maybe under subsection 1 clause A, B, C, D, whatever it is. You should, for taking this ITC, you should file a form here, GST ITC 01. That's all, within 30 days of becoming eligible for ITC under this particular section. And in that you should give the details of inputs, capital goods, what and all you are eligible. And suppose if at all that amount totally CGST, SGST, IUT, GST, GST all put together, whatever you are claiming ITC, if it is exceeding 2 lakh rupees, then you should get it certified by the chartered accountant or cost accountant who are in practice. Okay, I repeat, entire ITC, eligible ITC. Okay, if at all it is exceeding 2 lakhs in form GST ITC 01, then you should go for the certification from practicing chartered accountant or cost accountant. That is what the concept. Okay, so now that is what Rule 40 says. So Rule 40 is this procedure for calculating all that stuff. So we have calculated. So I repeat, 18 subsection 1 is all about availing ITC in special cases, A and B one set, C and D another set. Liable for registration, voluntary registration, composition scheme to normal scheme, exempt supply becomes taxable supply. Here only inputs, here both inputs and capital goods. Here not registered, now registering. Here already registered, now paying tax. Okay, so that is the case. So here inputs, both, all the 4 cases inputs, proportionately you can take ITC. Capital goods in the last 2 cases, clause C and D, how you will proceed? Rule 40. Rule 40 says total GST paid minus 5% per quarter or part thereof used. On that you can take ITC. So that is what we have seen. Now Sir, the interesting part is if you want to take ITC under 18 subsection 1, just now as we have discussed all the four cases, clause A, B, C, D, all this stuff. If you want to take ITC under those four clauses, any of those four clauses, the time limit to avail ITC is 1 year from the date of invoice. That means the 16 subsection 4 will give you actual time limit for availing ITC, that is for normal cases. But 18 subsection 2 will give you the time limit to avail ITC if at all you are claiming ITC under 18 subsection 1, then you should definitely follow 18 subsection 2 time limit. That means in short, 18 subsection 1, if you want ITC on inputs and capital goods, you should have that purchase within 1 year. Only for within 1 year purchases of inputs or capital goods you can take ITC. More than that you cannot take ITC. Am I clear with that? If you see here in this example properly, I have made sure that the purchase date and this exit date from composition scheme are falling within 1 year if you check. Okay, because of this particular logic of 18 subsection 2. Okay, fine, that is there, and there is an example also, you can just go through that. And next, as I was talking, let's just finish 18 subsection 4 and 6. 18 subsection 4 is nothing but simple, understand. 18 subsection 4 is nothing but, see, sir, when you are coming from composition to normal scheme, I am giving you ITC. When your exempt supply becomes taxable supply, I am giving you ITC. Then, suppose if reverse situation happens, you are coming from normal scheme to composition scheme, or you are going from taxable supply to exempt supply, then you should also reverse the ITC, correct? So this is exactly opposite scenario for 18 subsection 1. Exactly opposite scenario for 18 subsection 1. So here what you can do, sir, when you are going from normal scheme to composition scheme, or your exempt supply, taxable supply becomes exempt supply, sir, whatever the inputs and capital goods you are having, please reverse the ITC. Inputs proportionately will reverse the ITC. If it is capital goods, nothing but there you have taken ITC, availed ITC on quarterly basis. Here you have to reverse ITC on monthly basis. So simple, what we will do, sir, we will see how many months the capital goods is used. For example, Mr. Anil has purchased the capital goods and availed ITC 60,000. Now, the 60,000 I gave you ITC, assuming or believing that you will use this capital good for 60 months. Now, what happened after 3 years, 7 months, and 22 days? Sir, what has happened? Not told. Okay, let us assume he is coming out of composition scheme. He came out of composition scheme. So, Mr. Anil came out of composition scheme. Came out of composition scheme. So, we will take 3 years, 8 months as used. So 5 years, 3 years, 8 months are over, means that means still 1 year and 4 months. That means 16 months is still pending. So 60,000 into 16 divided by 60. That means 16,000 should be reversed. Proportionate ITC for the life of the asset. Life of the asset is 60 months. You see how many months still is left. For that you should reverse the ITC. Okay, for that you should file a form GST ITC 03. So that is what the concept. Hope you are clear with that. Okay, so with this we are done with 18 subsection 4 also. Simple, 18 subsection 4 is nothing but exactly opposite scenario for section 18 subsection 1 clauses and D. Hope it is clear. Okay, now 18 subsection 6, let us go with 18 subsection 6. What is 18 subsection 6? So 18 subsection 6 is nothing but if you have availed ITC on any capital goods, that capital goods is being sold, that capital goods is being supplied. In such cases, what will be the reversal of ITC? Simple, sir. The law says, you see, exactly ditto what we did in 18 subsection 1. Their total GST paid minus 5% per quarter or part thereof. There you are availing ITC for the first time. So total GST paid minus 5%. Here you have already availed ITC, you have to reverse the ITC. So total ITC availed earlier, minus 5% per quarter or part thereof of the usage. That will be the calculation. You should be technically very much clear about the wordings what you are using. Please understand that. There total GST paid minus 5% per quarter. Here total ITC availed minus 5% per quarter or part thereof. Okay, and you should compare it with sale price into GST rate, whichever is higher, that much you have to reverse. Please understand that. Okay, so now see, for example, Mr. Sanbir Kapoor has purchased a capital goods on 2nd June 2023. This is happening in Q1 23-24 financial year. Purchase price 100 lakhs, GST 18 lakhs. That means what? GST rate is 18%. Okay, now sir, he is selling this capital goods on auspicious day 14th Feb 2024. This is also falling in 23-24 financial year for 70 lakhs. Compute the reversal of ITC. So you tell me here, how many quarters we have used this? 4 quarters we have used. That means for that 4 quarters taking ITC is correct. Balance quarters you have to reverse, correct. So total ITC availed 18 lakhs minus 4 quarters into 5%, that is 20%. If you eliminate balance amount, that one you should compare with sale price 70 lakhs into GST rate 18%. Whichever is higher, that much you have to reverse. That much you have to reverse. So 14 lakh 40,000 or 12 lakh 60,000, whichever is higher. Sir, which is higher? 14 lakh 40,000 is higher. So that much we have to reverse. Clear? Hope it is clear for you. So 18 subsection 6. So with this we are done with 18 subsection 6 as well. So 18 subsection 1, 4 and 6, if you see, we have discussed in them. In them, capital goods, we are, see, 18 subsection 1 we are availing ITC, subsection 4 we are reversing ITC, subsection 6 also we are reversing ITC. So that is what the concept all about. Hope it is clear for you. Fine. So with this we are done with 18 subsection 6. Let us move on to 18 subsection 3. So if you see 18 subsection 3, 18 subsection 3 is nothing but when you are selling your business, the business may be transferred because of like merger, amalgamation, demerger, etc., whatever it is. And because there is transfer of business, what the transferor can do is the transferor can transfer his unutilized e-credit ledger balance to the transferee who is buying his business. Okay, so just like how do you transfer money from your bank account to another's bank account, here when I am selling my business to you, from my e-credit ledger, whatever unutilized balance is there, that I can transfer to you, provided there is a sale of business with a provision of transferring all the liabilities. Okay, so transferor from his e-credit ledger, he can transfer to his e-credit ledger balance the unutilized amount. And as I repeat, the condition is the sale of business should be the condition that transfer of all the liabilities. That is the condition which is very important. So now we are seeing the last step of this chapter, Rule 86A and 86B. Rule 86A, first of all, sir, commissioner or any authorized officer can restrict your ITC utilization, to be utilization actually. Why he can restrict your ITC utilization? Because if your ITC balance is being reflected of the because of the supplier filing the invoices. Your supplier has filed the invoices and that invoices are reflected in your 2B, and that supplier is a person who is not even existing. That means you took those suppliers have to fake registration and sold something to you, or they are not doing business from the declared place of business, or without receiving goods or services you have received that invoices in your 2B. In such cases, or the tax has not been paid by the supplier to the government, or the registered person who is availing ITC, that means the recipient itself is found non-existing or not conducting the business from the registered place. So either supplier is not existing or not doing business from his registered place of business, or he has just issued invoice without supplying goods to you, or supplier has not paid tax to the government, or you, the recipient, has not been found existing or not doing business from the registered place of business. In such cases, the proper officer can restrict your ITC utilization, or even if you are not in possession of tax invoice or valid documents regarding that purchases, then also he can restrict your ITC utilization. That is Rule 86A. Okay. So who has the authority? All the stuff that has been given, you can just take care of it. Now coming to Rule 86B. Rule 86B is nothing but, actually in simple words, Rule 86B says at least 1% of the liability, at least 1% of your gross GST liability to be paid in cash. That is what it says. Be paid in cash. That is what it says. Am I clear? 1% of the liability to be paid at least in cash is what Rule 86B all about. So when this Rule 86B is applicable, this Rule 86B is applicable when your supplies in the month, please be very careful, supplies in the month exceeds 50 lakhs, but other than exempt supplies, other than zero rated supplies. Sir, other than exempt supplies and zero rated supplies, sir, if it is exceeding greater than 50 lakhs, the taxable supplies in that month, then Rule 86B is applicable. So when this Rule 86B is applicable, what is your primary duty? Your primary duty is, sir, you should discharge at least your gross GST liability, at least 1% you should be discharging in cash only. That is what the point. Even though you have sufficient ITC balance, you cannot use full ITC balance. At least 1% you should pay in cash. Okay. So look at this example, sir. The total value of interstate supply of Kasi and Sons for the month of Feb is 100 lakhs, exceeding 50 lakhs. GST is 18% full IGST. So now IGST payable is 18 lakhs, but amount available in credit ledger is 20 lakhs. And you know, sir, amount may be available in e-credit ledger 20 lakhs, but at least 1% of this liability you should discharge in cash. So 18 lakhs, what they should do, sir, 18,000 at least in cash, and 17 lakh 82,000 they can use ITC. Okay, so that is what the concept. But there are certain crazy things here, exception to that rule 86b. What are the exceptions, ma? Like rule 86b you need not follow. When rule 86b you need not follow, sir, you need not follow rule 86b when, suppose if you are an individual, the sole proprietor, partnership from the partners, HUF the karta, company the director, AOP BOI the members, trust board of trustees, these people have paid their personal income tax liability more than 1 lakh, in each of the 2 last financial years for which due date is over. That means based on these people, sir, based on these people, members of board or trustees, all that stuff, based on these people personal income tax liability in the last 2 financial years, these people has paid more than 1 lakh as their income tax liability, then for this particular company or partnership firm or even individual, for them rule 86b is not applicable. So this is one case where rule 86b is not applicable. Another case, sir, you have a track record, you are a registered person, you have a track record of claiming GST refund from the department, and in the last preceding financial year if you have claimed GST refund more than 1 lakh, maybe because you are having unutilized credit ledger balance because of zero rated supplies or inverted duty structure, whatever it is, then also for you rule 86b is not applicable. Okay, so this is another case. Next, sir, if you see the cumulative liability till date, sir, I have already paid discharge more than 1% in cash, sir, then you need not follow rule 86b. And finally, sir, if it is like government department or public sector undertaking, local authority or statutory body, for them also rule 86b is not applicable. So you have understood, don't trouble the trouble here. Okay, if you trouble the trouble troubles you. I am not the trouble, I am the government. Okay, so that is what the point all about. So their rule 86b is not applicable. Okay, so that is what the concept. With this we are done with rule 86a and 86b also. So we are going through the next clarification here regarding ITC on availability in respect of demo vehicles. See, generally, I am a car dealer, I am purchasing cars and selling cars. So when I am purchasing cars and selling cars, I have certain demo vehicles. So certain cars are kept as demo vehicle for like test drive, etc., etc., all that. Whether I can take ITC on that or not is the first question. See now, if I am an authorized dealer where I am selling cars, so the dealer is selling the cars. Dealer sells the cars. So he will provide trial runs, demonstrate the features of the vehicles, all that stuff. For that, he will purchase the vehicles and he will use certain vehicles as demo vehicles. So there, ITC is not blocked. That means here ITC available. ITC available. Now, no sir, I am not using the cars what I have purchased for giving demo or trial, etc., etc., all the stuff to the customers, but I am using it for transportation of my staff, employees, management, etc., sir. Then ITC is not available, so ITC is blocked. Here ITC is blocked. Okay, this is second situation. The final situation, the interesting part here is, sir, what you are doing, you are not an authorized dealer who will sell the cars directly to the customer. You are just acting as an intermediary or an agent where the manufacturer of the cars directly will sell the cars to the customers, but you are acting as an agent to sell the cars and you will take some commission for that. What you are doing for providing your services as an agent, sir, for providing your services as a agent to provide marketing services, vehicle test drive services, all that stuff, where you are not directly involved in vehicle purchase and sale. In such cases, you are, as I told you, manufacturer will directly issue invoice directly to the customers. Okay, now the point is, as an agent here I am purchasing some demo vehicles, correct, for test drives, and after certain time period is over I will sell them. Now I am buying the car for providing my services as an agent to promote the car, all the stuff. I am not engaged in further supply of said vehicles. Okay, who is selling the vehicles? Manufacturer is directly selling the vehicles to the customers. As I have already told you, invoice is directly raised by the manufacturer to the customer. In such cases, ITC is not available. Sorry. That means here, dealer is not actual seller of cars. Dealer is not actually the seller of cars, but he is an agent of manufacturer. Okay, so now, sir, whether this dealer is capitalizing the car, not capitalizing the car, all the stuff doesn't matter. He cannot take ITC because he is just providing service as an agent. He is not buying and selling the cars. Okay, so dealer is not buying the, better write down, dealer is not buying and selling the cars. So whether he's taking, capitalizing the point or not, all that stuff doesn't matter here. So ITC on demo vehicles does not depend on the capitalization. As you know, the exception in 17 subsection 5 is if you are engaged in further supply of such conveyances only, you can take ITC. Here you are not engaged in further supply of such conveyances, you cannot take ITC. No sir, as we have discussed in the first case, sir, I am the dealer, I am the authorized dealer where I will sell the cars also to the customers directly. For that purpose, I am buying the cars and selling the cars, and for that purpose, I made certain vehicles as demo vehicles or test drive vehicles. All that I can take ITC happily because I am buying the cars and selling the cars. So there is the clarification with respect to that. The next clarification is with respect to ITC on ducts and manholes used while constructing this optical fiber network. So in that case, in the construction of optical fiber cables or networks, sir, they are using ducts and manholes. On that, whether we can take ITC or not, in that department has clarified. Generally, plant and machinery, 17 subsection 5, you know, sir, plant and machinery is an exception. You can take ITC on that. So ducts and manholes will be considered as plant and machinery. They are not being specifically excluded from the definition of plant and machinery. That means ducts and manholes are plant and machinery. Ducts and manholes. Ducts and manholes are plant and machinery. So you can happily take ITC. You can happily take ITC. That is the concept. Okay. Right. Now, one interesting clarification in ITC chapter actually. So your friends or anybody would have struggled it to understand, or you would people would have explained it in a very like what complicated way. All that very simple one, just looks like little bit lengthy one. Apart from that, very easy one. Please understand that. What is this concept? Now see, I'll explain this with my artistic skills here. Okay. The original equipment manufacturer, this is mainly with respect to cars, there was a doubt. See, for example, there is a factory which is manufacturing cars, and there are dealers, you know, who are selling the cars or any goods you take. I repeat, this clarification is equally applicable for all the goods. Okay. What is this concept now? See, there is original equipment manufacturer factory. Near the factory, they are manufacturing all these things, and at the factory gate itself, what the dealer will do, dealer will go to the factory gate and take the delivery of the goods whatever he is buying from the original equipment manufacturer. So the delivery is happening, the delivery of these goods is happening at the factory gate of the original equipment manufacturer. So dealer will go there and take the delivery. So what happens, sometimes dealer itself, he will go take his vehicles and take the goods, or dealer will ask, sir, original equipment manufacturer, you only arrange some vehicle and send, we will take care of the cost, we will take care of the insurance, whatever it is, or if you are paying also, no problem, we will reimburse to you. Like that they will discuss. So here the point is, as per the contract, if you see, we call this as X works contracts. X works contract. Okay. So that means your X will not work here. So X works contracts now, sir, where the dealer will own the goods at the original equipment manufacturer's factory gate itself. So the goods are handed over to the transporter, and the OEM, the original equipment manufacturer, completes the delivery at the factory gate. At the factory gate itself, original equipment manufacturer is like, what, okay, fine, my responsibility is over, like that, he is leaving. Okay, so in that case, please understand that the original equipment manufacturer responsibility is ending at the factory gate. In that situation, dealer is getting these goods, right? Now the doubt is, sir, dealer is getting the entire risk at the factory gate only. Still, this goods has to travel from original equipment manufacturer factory gate to dealer's showroom or dealer's business premises, all these things. That means dealer has not yet taken physical delivery of the goods, sir. But in section 16 subsection 2, conditions for availing ITC, there is a condition that you can avail ITC only if you have actually physically received the goods. Then only you can take ITC, correct? So do you remember that only after the actual receipt of goods or services you can take ITC? Here, sir, I got the ownership, actual ownership at the factory gate, sir. But goods are still in transit. Goods are still coming to my place. The vehicles are still coming to my place, or goods are coming to my place. They are still in transit, sir. I have not physically received them. Can I take ITC? Is the point of the dealer. Now the department has observed this situation closely and told, hey, here at the factory gate itself, you are getting the ownership, you are getting total risk. So we will give you ITC then and there itself. Don't worry. That means even though the goods are not physically received by the dealer, we are seeing he is getting the risk and ownership, everything at factory gate. So we will give ITC, no problem. If you ask me, then the condition in section 16 subsection 2 itself will lose the relevance, actually speaking. So in all the cases, then people start will making X works contract agreement, all these things. Okay, so the moment the goods are sold, the invoice is raised, payment is made, whatever it is, the ownership risk, everything is passed at factory gate. So even though the goods are not physically received by me at my premises, I can take ITC. Okay, so now dealers are enjoying. Yes, super, sir, nice clarification, like that. And this clarification is equally applicable. This clarification, this same principle is equally applicable to other goods also. But point is, you should bring the goods for business purpose. If you are diverting it for non-business purpose, or in middle the goods are lost or stolen or destroyed, written off, disposed of, section 17 subsection 5, block the credit is there, you cannot take ITC. That is basic thing, sir. Please understand, that is basic clarification. The important thing is, at the factory gate, if you are taking the ownership, straight away they are giving you the ITC. So in 16 subsection 2, sir, the registered person can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate. So it is considered as recipient has received the goods. Even though he has not actually received, it is considered that he has received the goods. Okay, that means received the goods in the sense, technically it need not come to your business premises physically. You are receiving it at a factory gate, it is as good as you have received. That is what they are clarifying. Okay, and this is equally applicable for other goods also. Such a wonderful clarification. Okay, for people like dealing with these type of goods, where they are buying the goods on X factory basis, or you can say X works contract. Okay, in that way, right? So a nice clarification. See, being registration chapter, ditto same for CA inter and final students. So you can both use this video. So I'm recording this using final material, but still it is equally applicable for inter students also. But inter students, some small points, whatever not applicable for you, that I have removed while posting video exclusively for you. So in the marathon, nothing will be like related to inter people. So in final video, fully will be there for final students. Okay, so nothing to worry. Now coming to the point, sir, registration chapter. Section 22 to section 30 we are going to see here. First of all, section 22, who are liable for registrations? Persons who are liable for registration. So persons liable for registration, we have seen 10, 20, 40 lakh threshold limit and all. So for that purpose, we will divide entire India into three parts. One is special category states. Sir, Manipur, Mizoram, Tripura, Nagaland. The code to remember this is make my trip to Nagaland without Mega. That means M for Manipur, Mizoram, not Meghalaya. So the point is, the code to remember is make my trip to Nagaland without Mega. That is a code. Sir, in this first part of India, in all this, see, generally special category states for the purpose of section 10, 8 states, stunning ma'am code we have seen. But here it is only make my trip to Nagaland without Mega. So only 4 states. 4 states will come in next part. Now, part 1, when we are talking about this, sir, please understand, in part 1, sir, whatever you are doing in this particular part 1, exclusively may be dealing with goods, exclusively may be services, both goods and services. For whatever you do here, the threshold limit will be 10 lakhs. The threshold limit will be 10 lakhs. That is part 1. Okay. Now coming to part 2, I repeat, India we are dividing fully into 3 parts. One is make my trip to Nagaland without mega, 4 states, whatever you do there, 10 lakhs only, exclusively goods, exclusively services, both goods and services, it is same. Next, part 2. The code to remember this is, we know, we watch cricket and we see in cricket there will be how many stumps? 3. This side 3, that side 3, correct? So total 6 stumps. So the code for remembering this here is 6 a stump. Okay, that means 6 states. 6 denotes for 6 states here. So 6 a stump. Sir, stunning ma'am, whatever the 4 states are missing, sir, Sikkim is missing, Uttarakhand is missing, next Meghalaya is missing, and next one uh, Arunachal Pradesh was missing in part 1, correct? So here if you see, whatever we have not taken here, 4 states, Sikkim, Uttarakhand, Arunachal Pradesh, Meghalaya will come here, and Telangana, Puducherry will be added. Okay, so these 6 states. Okay, fine. We know the code 6 system. In this code, sir, in this part, in Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Meghalaya, and Puducherry. Okay, whatever you do, exclusively goods, exclusively services, both goods and services, it is absolutely, the threshold limit is just 20 lakhs. Okay, that is what the concept. Now coming to other part, remaining all other states and union territories are part 3. Sir, here if you are exclusively dealing with goods, then only it is 40 lakhs. No sir, I am dealing exclusively with services also as well as both goods and services also, sir, then it is just 20 lakhs. But even though you are exclusively dealing with goods, sir, if you are dealing with these special products, pan masala, tobacco, ice cream, bricks, fossil meals, earthen or roofing tiles, fly ash bricks, all that stuff, sir, for this 40 lakhs limit is not applicable. That means only 20 lakh threshold limit is applicable for these people. If you see the same goods we have seen even in composition scheme, but the only difference is, sir, in composition scheme aerated waters was there, here it is not there. That is the only difference, if you have understood. So this is the flow chart. Okay, so 1 second, if you want you can take screenshot of this. So that's all. With this, threshold limits are over. See, so simple, just like easy peasy to see. We have finished this. The threshold limits of registration. Now you will never forget threshold limits 10, 20, 40 always. Okay, you can divide entire country into 3 parts. Make my trip to Nagaland without mega, next 6 system, and others. That's all. 10, 20, 40 and 20. Okay sir, fine. Now here, sir, what if the threshold limit is in one branch? What is the threshold limit? If one branch is in special category state, another branch is in non-special category state, it will fall down to 10 lakhs. Sir, in the special category state, if they are wholly dealing with exempt or non-taxable supplies, then what should I do? Then every state will have their own limits. Okay, let me see, for example, sir, here Andhra and Manipur, we are making supplies 32 lakhs and 6 lakhs. Aggregate turnover is 38 lakhs. But for both the states, it will become 10 lakhs only. So in both the states, you are supposed to take registration. Okay, next. Sir, here I am making a taxable, I am making supplies, taxable supplies from Andhra Pradesh and exempt supplies from Manipur. If you see, sir, aggregate turnover is 38 lakhs. But sir, threshold limit, what is the threshold limit? Because in special category state, you are exclusively dealing with exempt supplies. You are exclusively dealing with exempt supplies. Sir, you can happily what? The other state, whatever there, the other state in that branch, that will happily enjoy the threshold limit. It will not be disturbed by the presence of special category state. Are you understanding the point? So I repeat, sir, if there is one branch is in special category state, one branch outside the special category state, in special category state, if you are dealing with exclusively exempt supplies, then your presence in special category state will not have any impact on the non-special category state branch. It will enjoy its own threshold limit. Hope it is clear for you. Now, sir, what is the definition of aggregate turnover? We have seen already aggregate turnover definition in composition scheme, correct? Sir, aggregate turnover, very important point. As I told you before also, aggregate turnover, the very important definition. Sir, aggregate turnover means it includes taxable supplies, exempt supplies, exports, interstate supplies between distinct persons. That means distinct person, one distinct person to another distinct person, interstate supply will be added in aggregate turnover, but it will not exclude CGST, SGST, UTGST, IGST, GST compensation cess, and value of inward supplies on which tax has been paid under reverse charge mechanism. Okay, so that is what the concept. Next, sir, what are the important points regarding aggregate turnover? Aggregate turnover includes turnover of all the branches. We know that is pan India turnover, value of exported goods and services, exempted goods or services, interstate supplies between distinct persons. All these things will be added. Next, all supplies made by the taxable person, whether on his own account or made on behalf of all the principals. So that also will be added in this aggregate turnover. So that is what the concept. So all the supplies made by the taxable person. If you are a taxable person, whatever the supplies you are making on your own account and also on behalf of some other principals, that also will be added in your aggregate turnover. Okay, next. That is the aggregate turnover definition. Now coming to the next one, sir, as I already discussed, sir, some goods are not eligible for 40 lakh threshold limit. They will enjoy only 20 lakh or 10 lakhs if they are in special category state. That point we have already discussed. Next, that 10 lakhs overall limit will follow all the stuff we have discussed. Next, interest income. Point G, here something I have missed out. So interest income, if you are using our compact book, just or my GST book, just make sure here interest income. Sir, interest income, see, as we have already discussed, interest income shall be ignored for the purpose of calculating aggregate turnover, but this is only for the purpose of section 10. If you remember, sir, for section 10 we will ignore interest income. For section 10 we will ignore interest income, but this is not section 10. We are calculating aggregate turnover for section 22, correct? So here interest income cannot be ignored. Okay, so now if you see, Mr. Hanuman of Andhra Pradesh provides following supplies of goods. He made some supplies to Mr. Ram, 12 lakhs, to Mr. Lakshman, 7 lakhs, to Sita, 10 lakhs, and he earned interest on fixed deposit from Ayodhya Bank, 2 lakhs, and supplies made on behalf of his principal, Mr. Sugriv, 2 lakhs. What is his aggregate turnover, and is he eligible for registration? Is he liable for registration, not eligible for registration? Sir, aggregate turnover, if you see, this 12 lakhs, this 7 lakhs, this 10 lakhs, this 2 lakhs also we should add, and this 2 lakhs also we should add. Total how much? Sir, aggregate turnover is 12, 19, 27, 27 plus 4. 1 second. 12 plus 7, 19, 19, 29, sorry, 29, 29 plus 4, 33 lakhs. Sir, aggregate turnover 33 lakhs, but still he enjoys the threshold limit of 40 lakhs. Sir, what is this I am trying to tell here? Sir, first of all, understand, his aggregate turnover we have understood, whether he is liable for registration or not. Sir, here my only point is, he is receiving an interest income, correct? He is receiving an interest income. Because he is receiving interest income, it is supply of service. So his threshold limit we should fall down to 20 lakhs? No, the answer is absolutely no. So here there is an explanation saying that, sir, the explanation says, even though you are providing, normally if you are providing services, your threshold limit is 10 lakh, 20 lakh, correct? In part 3, sorry, in part 3 also, sir, if you are providing in all the states, part 1, part 2, part 3 are there, no 3 parts. Sir, here if you see, if you are providing services 10 lakh, 20 lakh, and here it is 20 lakh. If you are dealing with exclusively services or both goods and services. Here we are in Andhra Pradesh, even though this fellow is earning service income, he is lending money which is nothing but service, and for which he is getting interest. So automatically threshold limit should fall down to what? Threshold limit should fall down to 20 lakhs. But the law says, sir, if any person is receiving only interest income or discount income and no other income from any other services, then he will be still. So sorry, there was an audio issue. So as the law says, if any person is receiving the interest income or discount income alone, and if he is just dealing with only goods, he is dealing with goods, but he is only having one service income, that is interest, then still he will be treated as he is exclusively dealing with goods, and hence he is eligible for threshold limit of 40 lakhs. That is what the concept. Okay, fine. Next, so the next one is simple one. If there is any transfer of business, Sir, if there is any transfer of business, obviously what? The transferor is registered, na? The transferee also should definitely go for registration. And if it is a corporate style of amalgamation, merger, all these things, demerger, etc., then in such case also, if the transferor entity is already registered, the resultant entity should also go for GST registration. So that is what the concept all about. So here there are some examples also, you can just go through this. So the next section is section 24, compulsory registration. If you see compulsory registration here, see who has to take compulsory registration. Sir, if you are dealing with interstate supply of goods, then definitely you should take for compulsory registration. For that we have a notes here. See, first of all, understand you are making interstate supplies. Sir, interstate supplies I am doing, sir, but I am doing interstate supply of services, sir. Interstate supply of services. If you are dealing with interstate supply of services, you happily enjoy the threshold limit. Enjoy the threshold limit, that is 10 lakh, 20 lakh, whatever is applicable for you based upon the state. Sir, enjoy the threshold limit. No, sir, I am dealing with goods. If you are dealing with goods, and if you are dealing with notified handicraft goods or any other notified goods, then in such case you also can make interstate supply with respect to those goods, but you should obtain a PAN card and generate e-way bill wherever you are transporting the goods. But the important thing here is, sir, for them the threshold limit of 10 lakh, 20 lakh is applicable, 40 lakh threshold is not applicable. Okay, that is what the concept. Okay, sir, what if it is other goods? Any other goods you are dealing and you are making interstate supplies, definitely you should take registration. Compulsory registration is required. That is what the concept. Right. So that is with respect to first point. Now the next one. Sir, casual taxable person. Casual taxable person also same story. With respect to notified handicraft goods, yes, he can enjoy the relaxation, but otherwise he has to definitely take registration. Okay, if he is dealing with notified handicraft goods means which are like predominantly made by hand, 51% at least by hand and 49% machinery is fine. Next, the person is liable to pay tax under RCM. That means the recipient who is liable to pay GST, he should definitely take registration. Next, but please understand here one important thing: when you are going with RCM, in RCM cases, certain cases they will say only if the recipient is registered, RCM will come into picture. In that case, if he is already registered, then he will pay GST under RCM. Or if he is not registered, RCM is only not applicable, because RCM is applicable only when he is registered. So if he is unregistered, automatically RCM will not come into picture. He need not take registration. But sir, in certain cases like body sponsorship services, if you see, recipient should be body corporate or a partnership firm. So in that case, they did not focus on whether the recipient should be registered or unregistered. So if the recipient is already registered there, he will go and pay GST directly. No sir, he is unregistered, then he will come take registration under section 24, because compulsory liable for registration, because he is liable to pay GST under RCM and he will pay. So simple. Law says registered, then only RCM. So registered only RCM, unregistered FCM. If law says just if this fellow is coming into picture, RCM will come into picture. Whether he is registered or unregistered, it is not specified in law. In that case, registered also RCM, unregistered also RCM. So if he is registered already, let him proceed, pay tax. If he is unregistered, first take registration and then pay tax. Okay, that is what the point. Okay, fine. Coming back to the one, sir, persons liable to pay tax under RCM. Yes, we have seen. Next, persons required to pay tax under section 9 subsection 5. E-commerce operator, Ola, Swiggy, all that. Next, the non-resident taxable person. Next, person supplying online money gaming from a place outside India to a person in India. Example, best example, Bet365 or PUBG, etc. Any other OIDR services where without information technology they cannot supply the service. Next, every e-commerce operator who is required to collect tax at source. Amazon example. Next, regarding that we will see the example. Just wait for some time. Next, persons who are required to deduct tax at source under section 51. Any local authority, Greater Chennai Corporation or Bruhat Bengaluru Mahanagarapalike, like that, or Greater Hyderabad Municipal Corporation, GHMC, that way. Next, persons who supplies on behalf of other taxable person. That means if the principal is registered or liable for registration, then automatically agent is also supposed to take registration. Next, input service distributors. Definitely to distribute the credit, he has to take registration. That is CA final concept. Okay, so in CA final you would have seen input service distributor. That fellow to distribute the credit automatically has to take registration, without which he cannot distribute the credit. Next, the next one is the person who makes supply other than section 9 subsection 5 through e-commerce operator, who are required to collect tax at source under section 52. So persons who make supply through e-commerce operator. First we have seen e-commerce operator to whom section 52 is applicable. I have told you is that here example Amazon. Sir, through Amazon whoever is supplying, that fellow has to take registration, but relaxation is there in section 23. We will see the notes here actually. Next, Okay. Sorry. Here when I'm discussing, I discussed about the supply of okay. OIDR services is here. Yes, example PUBG gaming company, all that, or Netflix also you can take. Next here, person supplying online money gaming. Okay. Online money gaming from place outside India to a person in India. Okay. Online money gaming, Bet 365, Rummy Circle kind of games from outside India. Online money gaming is different. Online gaming is different. Online money gaming involves betting. So online gaming you can take PUBG. Online money gaming you can take Rummy Circle, Bet 365, Dream 11 kind of thing. Okay. So if anybody from outside India providing these services to a person in India, then definitely they should take registration. Very important. Market important. Now coming to e-commerce operators, we have certain discussion to make. Some small flowchart we have. Sir, here understand e-commerce operators. Now let us take two types of e-commerce operator covered under 9 subsection 5 and others. Sir, e-commerce operator covered under 9 subsection 5 means that they are liable to pay GST under 9 subsection 5. In that case, sir, because e-commerce operator is liable to pay GST, TCS provisions are not applicable. TCS provisions are not applicable. So who is liable to pay GST here? E-commerce operator. So who will take registration? E-commerce operator will take registration. Okay. So registration will be taken by e-commerce operator. So supplier through e-commerce operator, that fellow need not take registration because e-commerce operator is liable to pay GST. No, why should I take registration? No, sir. No, sir. Other e-commerce operators, sir. For here example, we can take Ola, Uber, all that. Here, if you come Amazon, Flipkart, all that. Sir, here supplier is only liable to pay GST. E-commerce operator doesn't have any responsibility to pay GST here. So TCS provisions are applicable in this case. So because TCS provisions are applicable, e-commerce operator is definitely liable to take registration because he has to collect tax source and give it to government. Number one. Next, sir, supplier also should take registration. But section 23 says that your supplier, you are supplying goods or services through e-commerce operator. You enjoy the threshold limit, but the threshold limit is only 10 or 20 lakh, whatever it is, as the case may be. You just enjoy the threshold limit. That is what they are saying. So hope it is clear for you. So you can just go with the flowchart here. So e-commerce operators which are covered under 9 subsection 5, e-commerce operator is liable to pay GST, TCS will not come into picture, and e-commerce operator will take GST if he is liable to pay GST. Okay. So supplier need not take GST registration. In other cases, supplier is liable to pay GST. So TCS provisions are applicable, and e-commerce operator is liable to pay take registration, and supplier of goods and services, they can enjoy the threshold limits. Next. So I think we are done with section 24 now. So with this we are done with section 24. So coming to next one, section 23, persons not required to take registration. So mostly we would have done them in section 24 itself. Persons who are exclusively making non-taxable supplies and exempt supplies. For example, I am running a liquor shop, Amrut liquor shop, no need to take GST registration. Or Dr. Vishnuvardhan MBBS FRCS, London return, no need to take GST registration. Any agriculturist who is an individual or HEF to the extent of produce of cultivating the land is not liable for registration. That means here we are not talking about producer companies or any agri based companies, sir. They are liable to take registration. Okay. Next, persons who are engaged exclusively in making RCM supplies other than this metal scrap dealer. Okay, that means for example Jolly LLB advocate is there, sir. They are liable, they are not required to take any registration because all their supplies are covered under RCM. But if it is a metal scrap dealer, please understand, if it is for metal scrap dealer, so metal scrap dealer, what they will do, as long as they are unregistered, RCM will come into picture. Once their threshold limits are exceeding, then they should take registration. Simple. They cannot say because metal scrap is covered under RCM, we will not take registration. It is not like that. I repeat, metal scrap dealers. So if you see, I am a metal scrap dealer, sir. So when my sales are zero until it touches the threshold limit, then all my sales are subjected to RCM, so the recipient will pay GST. And once it is exceeding the threshold limit, then what will happen? I will become liable for registration and I will take registration. And now reverse charge mechanism is not applicable, only forward charge. So I repeat here, sir, simple. If you are a metal scrap dealer, please understand, as long as your aggregate turnover is not touching the threshold limit, you enjoy the relaxation and GST shall be paid under RCM. But once your aggregate turnover exceeds the threshold limit, then you are supposed to take registration and then FCM will be coming into picture. So as long as you are liable for registration and you have not taken registration, so RCM will come into picture. Once you become liable for registration, then you have to take registration and automatically FCM will continue. Okay, you cannot escape from taking registration. That is what we are trying to tell here. Next, Persons making interstate supply of services can enjoy threshold limit of 10-20 lakhs. That is what we have discussed here actually. So if you are making interstate supply of services, straight away you can enjoy threshold limit. But if you are dealing with goods, you should definitely go for compulsory registration. Otherwise, in case of notified handicraft goods, all that stuff. So this point also already discussed, that is regarding that notified handicraft goods. And any person making supply of goods or services through e-commerce operator, that is what we have just now discussed. No, sir, through e-commerce operator, this point, sir, this is what we have understood. Okay, this is from section 23, the relaxation. So we have already discussed section 23 while discussing section 24 itself. Okay, so the person making supply of goods, if you see through e-commerce operator, as we have discussed, that they can enjoy the threshold limit, the relaxation, correct, but they have to follow a procedure. Please understand, earlier we were not allowing the people dealing with goods selling through e-commerce operator. The sales through e-commerce operator were not allowed to them unless they got the registration, because if they are making supplies through e-commerce operator, they can make interstate supplies also. And we have a provision in section 24, if you are making interstate supply of goods, you should definitely take registration, correct. So if I allow you to make sales through e-commerce operator, you may make interstate supplies even without registration. Like that, government had a fear. Now they brought in a procedure where, sir, if you are a person dealing with goods also, you can enjoy happily, go through e-commerce operator, you can make a sales and you can enjoy the threshold limit for registration. But the condition is, you should not make any interstate supplies and you should not make supplies in more than one state. You should have a PAN and declare that PAN in the GST common portal and obtain a, give your address, the place of business, all that stuff, and the state whatever is there, you select that and you will get one enrollment number. That enrollment number will not be granted more than one. That means for every state you cannot get one enrollment number. What you should do, you take that enrollment number and give to the e-commerce operator. So e-commerce operator should make sure that you are not making any interstate supplies. So I repeat, if you want to sell goods through e-commerce operators, or what you should do, sir, you should first go to GST portal, give your PAN, business details, I mean the address, place of business, the state, everything. You will get enrollment number, and for one PAN only one enrollment number will be granted. It cannot be like for each and every state you will get one enrollment number. Okay, so that is one. And next you have to submit that enrollment number to the e-commerce operator, and e-commerce operator should make sure that you are not making interstate supplies. So tomorrow if I become liable for registration, and then if I want to take registration, then you take registration, but enrollment number whatever is there, that ceases to be valid. That ceases to be valid. That is what the concept. Next, commission agent who is making sale or purchase of agricultural produce through APMC. Sorry, commission agent who making sale or purchase of agricultural produce. That's all. Is he required to take registration, sir? He is dealing something which is exclusively exempt, sir. Then for him, what is the need of taking GST registration? So that is what all about. Section 23. Persons not liable for registration. So the next one, if you see section 25, 26, 27 is a time limit for taking registration. See, normally for casual taxable persons and non-resident taxable persons, they should apply for registration at least 5 days prior to the commencement of the business. But for others, sir, first start business, become liable for registration under section 22 or 24, and after becoming liable within 30 days you apply for registration. That is what the concept. Sir, if you are doing supplies from territorial waters, then take the registration from the state or union territory which is nearest to the appropriate baseline. Simple. And while taking registration, you know, PAN is the basic document which is mandatory. And if you are applying for registration to comply with section 51 provisions, the PAN is the document which is necessary for you. With that, you can proceed. Okay, so that is what the point. Next, sir, suppose if I am a person from outside India providing online gaming, money gaming services to person in India, sir, then should I declare my PAN and address or the state service? Not required, because you will not be having any PAN and you will not be residing in any of the states of India, correct? So these people are excluded from declaring their PAN and the state in which they are residing. But understand, these people, when they are taking registration, they should have an authorized representative in India. So they should appoint a person who is authorized person, and that fellow's PAN will be used. That is a different story. Okay, fine. Now coming to the next one, state-wise registration. This we have already discussed in supply chapter. Nothing but, sir, wherever you are having branches in multiple states, so in those states from where you are making the supply, you have to take registration, provided the threshold limits, etc., etc. Sir, if I am having multiple branches within the same state, should I go for multiple registration, sir? Not required. Single registration is sufficient. It is not required to have single registration or mandatory. Only you should have one registration. You can have multiple registrations. It is up to you. So one place he can declare multiple branches, one place he can declare as principal place of business, other places, other branches he can declare it as additional place of businesses. Okay. Next, as I told you, sir, taxpayer having multiple places of business in one state, separate registration is optional. Okay, but if they want to take registration, they can take registration, and later on if they take registration, what will happen? The supply is happening between the same branches within that particular state also will become supply. They should raise a tax invoice and they should pay tax on that, and recipient can take ITC. All that nonsense is there, just like normally the points we have already discussed in supply chapter. Next, registration under composition levy. So if one registered person in composition scheme also we have discussed that if one fellow wants to go for normal scheme and all other places become, all other registrations will become ineligible for composition scheme. Do you remember that in composition scheme we have multiple branches, sir? Some branches wants to go for normal scheme, some branches we want to go for composition scheme. Is it possible? Not possible, right? Everybody go with composition scheme or everybody go with normal scheme. That is what we have already discussed. Same way, sir, if one fellow becomes ineligible for composition scheme, automatically other persons also will become ineligible for composition scheme. That is another point. Next, this is something important here, sir. What is that? Sir, normally in one state you said there are like single registration is sufficient, multiple registrations not required, not mandatory, correct? Now, sir, what if in the same state I have one unit in special economic zone, one unit in domestic tariff area, that is outside special economic zone? Then what should I do, sir? Then definitely you should take multiple registration, separate registration. So in same state, I repeat, one unit is in domestic tariff area and one unit is in inside special economic zone. Then definitely you should take two registrations. That is what the concept. Okay, one registration is not sufficient. Here regarding that there are examples, you can just go through this. And for all the registrations within the SCZ, sir, within the same state, yes, one registration is sufficient. So hope it is clear for you. Next, voluntary registration. Yes, you can go for voluntary registration even though you are not liable for registrations. And distinct persons, 25 subsection 4 and subsection 5 we have already discussed. Next, another important one, sir, what is unique identity number? Okay, what is unique identity number? Okay, so here before going to that I will just show one small point. So here how many registrations required now? For all SCZs within the same state, one registration is sufficient, and one for outside DTA. Another registration for a branch outside SC. Okay, so there is what the answer for this question. Check that properly. Next, so as we were discussing unique identification number. Sir, what is unique identity number? Please understand, unique identity number, simple, nothing but, sir, this is granted to specialized agencies of UNO or any multilateral or financial institutions, consulates or embassies. Why this is granted? Now, purely for granting them refund on the notified supplies they have purchased. Sir, these foreign embassies, consulates, they are purchasing something on the notified purchases, whatever the GST they have paid, they can ask for refund. That refund to ask, they should have some communication with the GST department. That communication itself is nothing but unique identity number. So these foreign consulates, embassies or specialized agencies of UNO, they will make an application to the GST department, sir, like this we want a unique identity number, then that will be granted. Or MIA, that is Ministry of External Affairs, MEA, sir, they also can recommend to the GST department, then they will be granted unique identity number. So either they can apply or on the recommendations of MIA, so they will get unique identity number within 3 working days. And this is a centralized UIN. So state wise you need not take any UIN, centralized UIN. So that is what the point. So the purpose is only for what? Claiming the refund of taxes paid on notified inward supplies. Okay, that is with respect to unique identity number. So if you look at the next one, that is suo motu registration by proper officer. See, suo motu registration by proper officer. Suo motu registration by proper officer. See, generally you are liable to register, but you have not taken registration and you are caught by the proper officer during that inquiry, search or inspection, any other proceedings. Now what the proper officer will do? Proper officer will grant you the temporary registration and will ask you to submit all the relevant documents and then take the final registration. So what is that you have to do now? You have one option. Yes sir, now I am caught red-handedly, so let me apply for registration. Like that, submit all the documents whatever are required and take the registration. This is number one. Within 90 days you can do this. Number two, you may feel like proper officer doesn't know anything, so let me go for an appeal. You can file an appeal inside the department, within the department itself, and ask, sir, whatever the order passed by your officer is not correct. If they agree with you, no problem, but they are saying no, 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 our proper officer is correct, then what you will do? Then nothing to do, sir. Within 30 days, what we have to do, within 30 days from the grant of order, passing the order by the adjudicating authority, sir, what you should do, you should apply for registration within 30 days. Okay, that is what the concept of suo motu registration. So the next one, procedure for registration. Before going for procedure for registration, let me just finish this off. Deemed registration. Sir, there is a single registration for all the taxes, sir. Separate tax, you need not take separate registration. So one single registration is sufficient. And any registration granted under any SGST or UTGST Act, it is deemed to be that registration or UN is granted under CGST Act also. Okay, that is the another point. Next, effective date of registration. Very important point, effective date of registration. So what is this effective date of registration? Now, if you are applying for registration within 30 days from the date of becoming liable for registration, effective date of registration is when you became liable. No sir, after 30 days if you are applying, then it is date of grant of registration certificate. So for example, sir, you became liable on 1st November. You are applying for registration on sir, you are applying for registration. You are applying for registration on 18th November. Within 30 days only you are applying, and you are getting registration certificate. Second. Sir, 1st November you became liable. 18th November you are making an application. 4th December you are getting registration certificate. So what is the effective date of registration? Effective date of registration will be 1st November. Effective date of registration will be 1st November. Okay, that will be 1st November. Am I clear? No sir, I became liable for registration on 1st November, but I am applying for registration on 4th December, sir. I got registration certificate on 10th December. What is the effective date of registration? 10th December will be the effective date of registration. Okay, hope I am clear. Simple. If you are applying for registration within 30 days, date of becoming liable itself will be the effective date. And one more advantage, if you apply within 30 days is you can take ITC under section 18 subsection 1 clause A, if you remember. Okay, otherwise you cannot take that. Sir, I am applying for registration after 30 days, then the effective date of registration is date of grant of registration certificate, not the date of becoming liable. So that is what the concept. Next, so there are small points which you can just go through. Next, so let us move on to registration procedure. Right, so if you go through procedure for registration, there are two parts, part 1 and part 2. Part 1 is generally like what we should do from the applicant side, and part 2 is all about processing done from tax officer, proper officer side. Okay, so that is what the concept. Now coming to the point, sir, part 1, what it says, first of all, sir, in part 1 again there are two parts, are part A and part B. First thing, when we are applying for registration, we should give our PAN number, mobile number and email ID and state. Whatever the PAN you have given, that will be cross verified with the database of CBDT, Central Board of Direct Taxes, and your mobile number and mail ID will be verified through OTPs which are sent to the PAN number, linked mobile number and mail ID. So the point is, sir, mobile number and mail ID will be verified through sending OTPs to the PAN linked mobile and email addresses. Okay, that is another interesting thing, recent change. Next, once it is done, all these things, that is your PAN, mobile number, mail IDs are verified, you will get one thing called temporary reference number. By using temporary reference number, you can go inside and finish the part B of the application. So in part B of the application, nothing but all your personal details, that means the first name, middle name, last name, all the stuff, what is the type of business, regarding business details, then the place of business, principal place of business, additional place of business, what is the business you are going to do, top 5 goods and top 5 services what you are going to deal with, like that, complete details. If it is a partnership firm, all the details of the partners, company, directors details, all these things will be given and will be submitted. The part B of the application will be submitted. Okay, now So as I was telling, sir, taxpayer details we will be giving, business details will be giving, authorized signatory, authorized representative, principal place of business, additional place of business, goods and services, bank account. Like this, all details you will be giving in the application. Okay. So now after giving all those details, you will submit the application. While submitting the application, please understand there will be something called Aadhaar authentication. So whether you are selecting or not, that becomes very crucial. So imagine you have selected that Aadhaar authentication option. Now what will happen, sir, if you have selected Aadhaar authentication option? Sir, how do Aadhaar authentication happen? How does this Aadhaar authentication happens? Now, please understand. Sir, when we have selected Aadhaar authentication option, what will happen? Sir, we will get a mail to our mail ID regarding the Aadhaar authentication link, and that link, if you click, that will be taken you to a browser. In that, you enter your Aadhaar number and the mobile number to which the Aadhaar is linked, to that mobile number OTP will be sent, and that OTP, if you enter, that means your Aadhaar authentication is successful. Okay, so if Aadhaar authentication is successful, that's all. This is how Aadhaar authentication happens. If Aadhaar authentication happens, what is the advantage? Now, sir, the advantage is the processing of your application will be done by the proper officer in 7 working days. That means within 7 working days from the submission of application, sir, either your application will be accepted or they will be sending a show cause notice to you. Registration certificate they will grant, or they will send a show cause notice to you asking for some more details or clarifications. And now you should reply for those clarifications within 7 working days. And once you reply for the clarification, sir, if the proper officer is happy with your reply, then he will accept that reply and he will grant you registration certificate. If he is not happy with that reply, then automatically he will reject the application. So this is what happens if Aadhaar authentication is successful. So please understand, if Aadhaar authentication is successful, one biggest advantage is the processing time limit, of the application. The processing time limit of the application, sir, it will be processed within 7 working days. So within 7 working days, either you will get registration certificate or you will get a show cause notice. Once you get a show cause notice, reply to the proper officer within 7 working days. So if you are not replying, the application is deemed to be rejected. Please understand that. Sir, you are giving the reply and he is happy with that reply. Then you are giving reply, he is happy with your reply. Then he will grant you registration certificate. No, sir, he is not happy. Then he will reject your application. He will reject your application. So he will also again process within 7 working days. Now the problem is, please understand, sir, what if the Aadhaar authentication has failed? Maybe because the name mismatch or the mobile number is not available, some reasons, some technical reasons, Aadhaar authentication failed. Or you have not opted for Aadhaar authentication itself when you are applying for registration. Or proper officer wants to carry out site verification. Or the system has selected your application for site verification and biometric based Aadhaar authentication. That means there is no OTP verification and all. They will take your thumb impression and will do biometric based Aadhaar authentication. For those cases, what they will do, they will take 30 days time for processing your application. 30 days from the date of submission of application, they will process your application. So within 30 days from the date of submission of application, that they will either grant registration certificate to you or they will ask you some clarifications by sending show cause notice. Now what you should do, again same story, you should reply to the show cause notice within 7 working days. And if you are replying within 7 working days, proper officer may feel happy with that reply and he may grant you registration certificate. Or if he is not okay with that, then he will reject your application. That means, please understand, if Aadhaar authentication has failed or Aadhaar authentication not opted, or proper officer has selected your file for site verification, or system has selected your file for site verification and biometric based Aadhaar authentication, then the starting point, the processing of the application, the starting point will differ. So generally here what will happen, sir, here it is 7 working days, 7 working days, 7 working days, correct? But here what will happen, this is 30 days, 7 working days, 7 working days. That is how it will change. And here the 30 days also, if you see, the 30 days calculation will be different. The 30 days is from the date of submission of application. What do you mean by that, sir? What do you mean by that? Na, sir, 30 days from the date of submission of application means the date of submission of application means the date of Aadhaar authentication, or 15 days from the submission of application in part B of form GST REG 01. What does it mean, sir? That means, sir, you submitted the application part B from that date of Aadhaar authentication or 15 days, whichever is earlier. That means if you have selected Aadhaar authentication and if you are not doing, the system will wait for 15 days for you to do Aadhaar authentication. That means here 15 days waiting period plus their 30 days, total 45 days you have to wait if you are not doing Aadhaar authentication. So Aadhaar authentication is really very important for the registration, so that the time delay can be reduced. Okay, that is the concept. Next, So we are done with this. What if Aadhaar authentication happens and what if Aadhaar authentication is not happening? That the time limit of processing all these things will differ, that we have understood. Now coming to the point. Next. Sir, here we are discussing time limit, no 7 days, 7 working days, 30 days, all that stuff and all. Sir, in those cases, please understand, proper officer also has a time limit, you are also having time limit. If proper officer is not doing his duty within the time limit, then the application is deemed to be accepted. You are not doing your duty within the time limit, that means you are not replying within the time limits, then the application is deemed to be rejected. That is what important thing. Okay sir, fine. Now, sir, so long you have been worrying about doing Aadhaar authentication, sir. For whom we should do Aadhaar authentication, sir? How I have already explained. You will get the mail, all this stuff, entering the OTP. Everything I have explained. How I have explained. So the only thing is, sir, who should do the Aadhaar authentication, sir? How we will do that, we have discussed. Who should get it done? Sir, obviously, if it is a sole proprietor business individual, he himself should get Aadhaar authentication done. In other cases, for HUF Karta, for company managing director or whole-time director, for a partnership firm partner, for AOPI, BOI society, their members, for trust, board of trustees. For them, we should get the Aadhaar authentication done. Now, sir, when physical verification of the principal place of business will be done? As I already told you, Aadhaar authentication failed, or you have not opted, or proper officer wants to carry out site verification, or the common portal has selected your application based on the data analysis and risk parameters for biometric based Aadhaar authentication, then physical verification will be done. And physical verification, for doing physical verification, the interesting thing is, sir, the physical presence of the applicant or the registered person is not required, sir. Physical presence of the applicant or the registered person is not required for carrying out the physical verification of the premises. Okay, that is what the point. Next. So now when they are carrying out the physical verification, what will happen? Sir, after the grant of registration, they may be doing physical verification, or before the grant of registration also they may be doing the physical verification. Sir, if they are doing the physical verification after grant of registration, you may be feeling, sir, after granting registration, why physical verification will come into picture, sir? Because Aadhaar authentication has been like a recent topic, not from the beginning of GST. So earlier, who got registered under GST law, they did not do Aadhaar authentication. So now, sir, if they are getting their Aadhaar authentication done, sir, the verification report will be uploaded within period of 15 working days after that verification. Okay. Now, sir, before the grant of registration, that means your application has to be verified, correct? So other physical verification is being done, sir. Somebody will come and do the physical verification, and they will upload a report to the other officer. That officer will process the application fully and grant you registration certificate. So whoever is coming for the physical verification, when he should complete the physical verification, at least 5 working days prior to the completion of the time limit. We have discussed 30 days, all that stuff for processing the application. So here, before completion of this 30 days, at least 5 days prior to completion of this time limit, somebody should go do site verification and give me the report. Then I will process the application and see whether okay, everything is fine, I should grant registration certificate, or I should ask him any clarifications like that. Then I will decide. So first one officer will go and do site verification, they will give a report to the higher officer, and that fellow will do the processing of the application. Okay, so when that other officer should go and do site verification, at least 5 days prior to the 5 days prior to the completion of this time limit, the other officer should go and do this. Okay, that is what the concept. Next, as I told, while doing this site verification, that particular registered person or the applicant need not be present physically, right? So as I already told you, sir, what is the time period for processing the application? Aadhaar authentication is successful now, 7 working days from the date of submission of application. From the date of submission of application. Other cases, sir, 30 days from the date of submission of application. Okay, so what is the date of submission of application? Meaning whenever the Aadhaar authentication is done, that date, or 15 days from the date of submission of part B, whichever is earlier. That will be the time limit. Okay, that will be taken as date of submission of application. So this is how the registration procedure will take care. And now Aadhaar authentication also, if you see, if a registered person, if you are going for Aadhaar authentication, as I told you already, sir, if you are already registered but your Aadhaar authentication is not done, for you there are certain drawbacks. What are the drawbacks now? You cannot file the application for revocation of your cancellation, and you cannot file any refund application under Rule 89. and you can also not apply any refund application under rule 96. Okay, so these are the disadvantages if you are already registered under GST before the other authentication concept came, and now you are not getting other authentication done. These are the 3 drawbacks for you. Okay, so you will not be eligible for this. So if you want these things to be done, you should do your other authentication. That is what rule 10 is saying. Sir, now okay sir, fine, for me Aadhaar number itself is not assigned sir, what should I do sir immediately? Sir, don't worry, first apply for Aadhaar card, get that enrollment ID, and along with that your bank passbook with the photograph or voter ID or passport and driving license. You please submit these things. Aadhaar enrollment ID slip, along with that these things. You just submit, and then later on whenever you get the Aadhaar number, then you finish the other authentication. That is what the concept. Within the period of 30 days from getting the Aadhaar number, you do the balance Aadhaar authentication concept, everything, finish it off. Right. So that is with respect to other authentication and everything. And yes, here, sir, for certain people, other authentication is not required, sir. Who are those people for whom other authentication is not required? A person who is not a citizen of India, and state or central government establishments or departments, local authorities, statutory bodies, public sector undertakings, a person who is applying for unique identity number. For these people, other authentication is not required. Okay, so that is what the concept. Now, sir, here there is something, a small rule called rule 10A here. What is that rule 10A? Nothing but, sir, they are asking you to update your bank account details at the time of applying for registration, or even after getting registration also you can update your bank account details, but you should do that within 30 days from the date of grant of registration, or before furnishing the GSTR1 or IFF, whichever is earlier. Am I clear? So you should update your bank account details in GST portal within 30 days from the grant of registration, or before furnishing your GSTR1 or IFF, whichever is earlier. But the crazy thing is, now recently they have updated the concept here, amended the concept here in rule 10A. If you are not doing that, if you are not updating your bank account details, your registration shall be suspended, and later on you update the bank details, automatically suspension will be revoked. But sir, registration is suspended and registration is also cancelled. Now you cannot go and do the other, like update the bank account details, and automatically it will not get revoked. So simple, your registration will be suspended. Immediately you respond and give the bank account details, suspension will be revoked. But this you should do before cancellation. Okay, that is what the concept. In case of sole proprietor, sir, we have also to link the PAN with the Aadhaar. For the proprietor PAN, we should be linking it to the Aadhaar. Right, so those things we have discussed, and other authentication, everything. So with this we are done with registration procedure. So the next one, if you see the special procedure for registration for NRTPs and CTPs, we already know the meaning of NRTP and CTPs. A non-resident taxable person means who doesn't have any fixed place of business or fixed place of residence anywhere in India. But coming to CTPs, CTP is a person who doesn't have any fixed place of business in the state from which he is making the supply. So CTP and NRTP, already we have the idea. Now coming to the point, sir, registration procedure here, as we have already seen, in registration procedure they should apply for registration at least 5 days prior to the commencement of the business. That is a different point for them. And GST registration is a PAN based, but NRTP will not have the PAN in India. You will get the registration based on other prescribed documents. What are the other prescribed documents? As I told you already, self-attested copy of valid passport along with the application signed by Indian authorized signatory who is having a valid PAN. So no sir, the NRTP is a business entity incorporated outside India. With that registration certificate what they got outside India, that unique number they should use here, or if they have any PAN in India, that also they can use. Okay, so that is what the point. Fine. Now the normal form GST REG 01 can be used by normal taxpayers, that also can be used by casual taxable person. There is no other separate form for applying registration for CTPs, but for NRTPs there is a separate form. Okay, fine. So that is okay. Here the important thing is this, the advance tax and the validity. These are the two very important points. So generally when we are taking registration for normal people, we will not have any concept of advanced tax in GST. But for CTP and NRTPs, what they have to do, sir, they are asking for registration. Sir, whatever the period, normally the registration certificate validity will be lifelong. But here for CTPs and NRTPs, sir, the validity will be 90 days maximum. They can ask for 10 days, but they will get 90 days. The number of days for which registration is sought for, or 90 days, whichever is earlier. So they can ask for 10 days, they will get 10 days. They can ask for 40 days, they will get 40 days. They can ask for 120 days, but they will get only 90 days. So please understand how much days they have asked, and 90 days, whichever is less, that much only they can have the validity. And they also have the option to extend that validity before the expiry of that registration validity. They can also ask for extension of the validity. So now what they can do, extension also they can ask for maximum 90 days. That means I can say, sir, initially they can ask for 90 days and plus again another 90 days extension. That is possible. Another 90 days extension, that is possible. Now please understand. So here the concept is, sir, when they are applying for registration, when they want registration certificate for, first let us assume 20 days, they are going for any exhibition, participating in that and selling the sarees, all that stuff. Sir, in such cases, sir, for the 20 days they want registration. No, for the 20 days, what will be the GST liability that they have to calculate before, and then that liability they have to first deposit, and then only their application for registration will be processed. Okay, hope it is clear for you. And again later on, if they are asking for extension also, when they are asking, sir, for example 5 days extension, they are asking for 5 days, whatever is the tax liability going to be there, that they should calculate and they should deposit. That is what the concept of advance tax. That means CTPs and NRTPs, sir, while applying for GST registration, they should also assess their tax liability, how much that can be for the period what they are asking for registration. That amount they should deposit in advance, and then only the registration application will be taken up for processing. Okay, this is one different point. Once the registration is granted, sir, whatever sir once the registration is granted, sir, whatever they have deposited, that amount will reflect in e-cash ledger. Of course, after registration is over or whatever it is the expiry, there can be some shortfall or excess amount. If they have paid short paid, then they can again deposit the cash. If there is any excess amount, they can claim it as refund. Okay, that is another point. Right, so that is the concept. Now coming to validity again, stressing on that validity point. So here if you see, so the registration validity itself will be, as we were discussing, 90 days and 90 days. See, first, that means you can say maximum 90 days, but it doesn't mean that, sir, first I have asked only for 20 days, sir. Now I can go for 120 days, sir. Can I ask that way? No, you cannot do that. Sir, first you have asked for 20 days. Later again, when you are going to ask, you can ask maximum for 90 days. That's all. You cannot ask more than that. So each time you can ask only maximum 90 days. Okay, that is what the concept. So that is why maximum 90 plus 90. Sir, first I have asked for 10 days, sir. Now I'll ask for 120 days. Not possible. Sorry. And there is one more clarification here, sir. In case of long run exhibition for a period more than 180 days, what should I do, sir? You don't do anything. Take registration as a normal taxpayer. Don't call yourself as a casual taxable person. There itself obtain registration as a normal taxable person. Once the exhibition everything is over, cancel your registration and go back to your place. That is what the point. And the allotment letter granting the permission to use the premises of the exhibition, that itself will be treated as proper document for granting you the registration certificate, treating it as place of business. That is with respect to CTPs and NRTPs. The next one is cancellation of registration. Cancellation of registration, see, understand, either you can ask for cancellation, that is voluntary cancellation by the taxpayer, or suo moto cancellation by the proper officer. Proper officer also can cancel your registration. Now, sir, what can be the reasons for cancellation? See, these are the common reasons. Actually, this set is, they are common reasons for both voluntary cancellation as well as suo moto cancellation. For both, these are the common reasons. What can be the reasons, sir, why we will be cancelling your registration? Why you can ask, or why we can cancel? In case of discontinuation of business, transfer of business, death of proprietor, amalgamation, demerger, change in the constitution of the business. Change in constitution of the business means sole proprietor converted into firm converted into a company. Okay, in those cases. Okay, next, taxable person who has taken voluntary other than voluntary registration, who is no longer liable for registration under section 22 or 24. 22 or 24 said me, sir, earlier to take registration and I have taken. Now those sections got amended where I am not liable for registration anymore, then also that registration can be cancelled. Okay, that is fine, simple one. This is very, very, very important point. So this is very, very important point. What is that? Suo moto cancellation by proper officer, section 29 subsection 2. So suo moto cancellation by proper officer. Why proper officer will cancel your registration on suo moto? Guys, these are like not common reasons. This is only for suo moto cancellation. Sir, if you have registered and you are not doing business from the declared place of business, sir, or you are issuing invoice or bill without supplying the goods or services, sir. That means, can I say fake invoices? You're issuing fake invoices, sir. Or you're violating the provisions of anti-profiteering measures, sir. Or you are violating the provisions of Rule 10A. 10A, just now we have seen that bank account details updating. Next, you are availing ITC in contravention with Section 16. Next, your outward supplies in GSTR 1 or 1A are more than 3B. That means your sales, what you are disclosing in 1 are greater than whatever you are disclosing in 3B. Because in 1 you have to give information, you have given full information. In 3B you have to pay tax. You don't have money, so you are showing less amount. Sir, you are violating the provisions of Rule 86B, sir. Next, you are violating the 86B, 1% of tax payment in cash, so that you are not doing. You are violating the third or fourth provision of Rule 23 sub Rule 1, sir. That is nothing but, see, here your registration cancellation has been revoked. Revocation of cancellation of registration. Sir, in that case, what is happening? You should file all the pending returns within 30 days after the revocation order. That you are not doing. That is the case here. Okay. So I repeat, sir, when your registration is cancelled, you are going and asking for revocation. When you are asking for revocation, they are asking you to file all the pending returns after revocation, which you are not able to file right now. So revocation order is granted and you are supposed to file the pending returns. You are not filing that within 30 days. Then again they can cancel your registration. Next, registered person who is required to file GSTR 3B mass section 39 is nothing but what? 3B. Sir, 3B continuously for 6 months. So GSTR 3B for continuously for 6 months you did not file. Or 3B when you are supposed to file on quarterly basis. That means here, can I say, in this case, sir, you are a monthly filer, and in this case you are a quarterly filer, that is QRMP scheme fellow. You are a QRMP filer. You have not filed GSTR 3B continuously for 2 quarters. Continuously for 2 quarters. Then your registration can be cancelled. Or you have opted for composition scheme and not filed the return of the financial year even after 3 months from the due date of filing. Sir, due date of filing GSTR 4. They are talking about GSTR 4. GSTR 4. Sir, due date is 30th June to file it. Earlier it was 30th April. Now it is 30th June. Sir, that 30th June is over, sir. That 30th June is over by 3 months, sir, already. Still you did not file. Then your registration can be cancelled. You have taken voluntary registration but you have not commenced the business within 6 months. Or your registration is obtained by fraud, willful misstatement, or suppression of facts. Then also your registration is liable for cancellation. Suo motu cancellation comes into picture there. Okay. Now, sir, application and procedure for cancellation here. If you see, sir, you will apply for cancellation, all that stuff. Then there will be cancellation proceedings going on, all that. So basic the procedural aspect here. This you can just go through once. Not that greatly relevant. If you don't have time, you can just ignore also, not an issue. Now coming to the next one, just go through that once. Suspension of registration. See, understand, suspension of registration, sir, when your registration is being cancelled, first they'll give you show cause notice, all that stuff, and till the registration cancellation proceedings are pending, your registration will be first suspended. So registration is suspended means that during that period you cannot file tax returns, you cannot issue tax invoice, and you cannot make any taxable supplies. Okay, so till the cancellation proceedings are concluded, your registration shall be your registration shall be suspended. Am I clear? No more taxable supplies, no more tax invoice, and no more filing the returns. That is what you will do in suspension period. Now, sir, when this suspension will be revoked, sir, when this will be settled, sir? Once cancellation proceedings are over, either your cancellation is proper, so they will finish cancellation, so suspension itself will not be there anymore. Or, sir, this the cancellation proceedings, they have decided, no, your registration is not liable for cancellation. Then what will happen? Your suspension will be revoked. So at any point of time, once cancellation proceedings are over, no matter the result is positive or negative, your suspension will be revoked. That is there. But one interesting point is, sir, proper officer has the power to revoke your suspension, even during the pendency of cancellation proceedings. Even during the pendency of the cancellation proceedings, he has the power to revoke the suspension. Okay, so that is one interesting thing. That is with respect to cancellation here. Suppose if your suspension is or cancellation is initiated because of not filing the returns, once you file all the pending returns, automatically suspension will be revoked. That is another point. Next, so I think I have discussed all the points here. Okay, so that is with respect to suspension, and there are other small points, you can just go through that. Now the very important point is, sir, revocation of cancellation. Sir, your registration is cancelled, sir. That registration cancellation, what we are doing, we are asking for revocation. Sir, when we are asking for revocation, we should go and apply for revocation within 90 days. Within 90 days. But if you remember, if you have not done other authentication, revocation you cannot apply. Okay, that is what rule 10b. If you are not complied with rule 10b provisions, sir, you cannot apply for revocation. Okay, sir, 90 days over, sir, but I did not apply, sir. There was some family problems or health related issues, etc. So we did not apply, sir. What should I do? You can go to the additional commissioner or joint commissioner. They can condone the delay. AC or JC, additional commissioner or joint commissioner, they can condone the delay for a further period of 180 days. That means it is not 90 including that 180 days. 90 days is there? No, it is not like that. It is 90 plus 180 days. So it is 90 plus 180 days. So please understand that 90 days is given in law, 180 days extra additional commissioner and joint commissioner has the power to give you. So that is what the point. Now the interesting thing is, sir, when your registration is cancelled because of not filing the returns, sir, what is the effective date of cancellation, sir? You know, see, understand the interesting thing in section 29, when the registration is being cancelled by the proper officer, the proper officer can cancel the registration from any date which he deems fit. That means he can cancel even with retrospective effect also. He can cancel the registration with retrospective effect also. So in such cases, sir, imagine, look at this question. Sir, I did not file the returns from Jan to June continuously for 6 months, sir. So my registration is being cancelled. My registration is cancelled on, imagine, July 5th, and the revocation is applied on July 20th. Now, what is the responsibility of, imagine, Mr. Aravind while applying for revocation under section 30? We understand now the problem is from when it is cancelled. Sir, Jan to June I did not file the returns, but from prospect effect, immediate effect only, they cancel my registration July 5th. So what should I do first? Jan to June, whatever the returns are pending, that I should file, and then I can go and ask for revocation. Okay, so revocation order is passed on August 31st, imagine. Sir, Jan to June I have filed all the pending returns, correct? Sir, Jan to June all the pending returns I have filed and I got the revocation. But July, August are still pending. Whatever the pending returns are there at the time of revocation, sir, what we should do? They should be filed within 30 days. They should be filed within 30 days. Just like I discussed just now. Otherwise, your registration is liable for cancellation again. Okay, that is the point. Sir, no, sir. Actually, the point is, what if they have cancelled my registration with retrospective effect of Jan 1st? That means now even one single return I cannot file, sir. What should I do now? Now you first go and ask for revocation. Sir, once they give the revocation within 30 days, so they have given revocation August 31st. So within 30 days, now you file all the returns from Jan to August, whatever the pending returns are there, all those returns you have to file. Okay, so first apply for revocation, and then within 30 days file all the pending returns. That is what the concept. So simple, sir. When your registration is cancelled because of not filing the returns, whatever the returns you are able to file, just pause the video and go through this, sir. Whatever the returns you have filed, please understand, you can file, and then balance returns after revocation within 30 days you file. Okay, so no, sir, I am not able to file any returns, sir. Then first go for revocation, ask for revocation, and then whatever the pending returns are there, that you file within 30 days. That is what the concept. So that is how we have finished all the important topics, or mostly the entire registration chapter has been revised. So the next amendment, if you see, there is a mistake here in the heading. You can just ignore this heading, whatever has been given there, clarification on ITC demo vehicles, all that. So here this particular concept is all about, sir, we have added newly situations where your registration can be cancelled on suo motu. So for suo motu cancellation of registration, sir, new reasons are added here. What are these reasons? Nothing but, see, when you apply for revocation of cancellation of registration, they will revoke your cancellation, asking you to file all pending returns, correct? So all the pending returns should be filed within 30 days from the date of order of revocation. Okay, so whatever the pending returns are there, once revocation order is given, sir, the revocation order is given means within 30 days you should file all the pending returns. If you have not filed the pending returns, then your registration is liable for cancellation. Proper officer has the right to cancel the registration. He gave you revocation believing you that you will file all the pending returns and now you will be a good boy. Still you are continuing the same thing. So they will not entertain this. Now the proper officer got again the power to cancel your registration. Okay, so that is what this amendment all about. New proviso, third proviso and fourth proviso are added below rule 23 sub rule 1.